Sir, good morning, sir. వాయిస్ వినిపిస్తుంది, కొంచెం వాల్యూమ్ పెంచండి సార్. బ్రేక్ అవుతుంది చూడండి సార్, ఒకసారి బ్రేక్ అవుతుంది మధ్యలో. కంటిన్యూ మాట్లాడండి. ఇప్పుడు వినిపిస్తుంది.
నో ప్రాబ్లం, రైట్, ఆల్ క్లియర్.
ఓకే సార్. ఓకే సార్, కడప సార్. సార్ కడప, ప్లీజ్ రెస్పాండ్ సార్.
Hello, good morning, sir.
Sir, good morning.
GDC Women Kadapa responding,
Yeah, okay,
sir.
sir, fine.
Thank
Audio
you,
is
sir.
clear, sir.
Thank you, sir.
Sir, Pileru, please respond. Pileru, Rajamandri, Tanuku, sorry, Tanuku అయిపోయింది. Pileru.
Sir, Pile responding, sir.
Sir, okay, sir. Rajamandri, Vijayawada, please respond. Rajamandri, Vijayawada.
Morning, sir. NRC Vijayawada responding.
Okay, sir.
Sir.
Good morning, all the NRCs. I request you all the KRPs, please inform to your participants, ask them to come inside quickly. Time is already there for online. Second, I'm requesting you all, please inform to all the participants. సార్ చైర్స్ ఖాళీగా కనపడకుండా కొంచెం ముందుకు వచ్చి కూర్చోమన్నాడు సార్ ఈ ప్రోగ్రామ్ ఇనిషియేట్ అయ్యే వరకు స్కాటర్ అయ్యి కూర్చుంటారు అందరూ కొంచెం ఫస్ట్ రోజుకి వచ్చేయండి ఆల్ ది ఎన్ఆర్సీస్ కొంచెం ముందు కూర్చుంటే ఇనిషియేట్ అయిపోయిన తర్వాత మీ ఇష్టం తర్వాత కూర్చుంది కానీ
Good morning, Dr. Srinivas. Am I audible?
audible. Ma'am,
Okay, great.
happy to see you, ma'am.
Good to see you too, sir. How are you doing?
Fine, ma'am, fine. Thank you. Thank you for accepting our invitation. Thank you so much.
Thank you so much for inviting me. It's a pleasure and an honor to be here. Thank you so much.
Ma'am, please give us time for 5 minutes maximum time, and by the time all participants will join. Okay, then
Okay. So I'm right here. I'm just muting myself. I'm right here. We'll get started when you tell us.
yes, ma'am. I will call you. Thank you.
Thank you.
Good morning, sir. I request you all NRCs, those who are present, please come online with the GDC Men's Srikakulam. Please switch on your video. GDC Ongol, GDC Ongol, please switch on your video. I'm requesting you all KRPs, please inform our participants, ask them to come inside quickly. Ma'am is there already in online. NRC Kadapa. Right. NRC Kadapa, please switch on your video. Okay, close this. NRC Ongol, what happened? Please come online. Switch on your video. Shweta ma'am, please come online. Switch on your video ma'am. We begin. Sweta ma'am.
Dr. Srinivas, am I visible?
Now I'm visible and audible.
Oh, great.
So it's my great privilege, and I'm also so fortunate enough to introduce for the today's session an eminent professor Sweta Singh ji. Sweta Singh is the PFS Chair Professor and the Area Chair of Finance at the Department of Management Studies, Indian Institute of Technology, Delhi. PFS Chair means IIT in collaboration with PTC Financial Services, they have established one chair in IIT Delhi. She is also the coordinator of National Center on Corporate Governance, accredited by National Foundation on Corporate Governance, NFCG. Her research focuses on interdisciplinary areas like corporate governance, corporate social responsibility, and entrepreneurial finance, which have a significant impact on social issues. She has contributed to various research and consulting assignments for the organizations like, there is a big list actually, Chief Information Officers Foundation, the Chief Information Security Officers Foundation, the Lok Sabha. It's a prestigious institutions. The National Foundation on Corporate Governance, the Directorate General of Supplies and Disposals, DGS&D, National Buildings Construction Corporation, the Indian Council of Social Sciences Research, ICSSR, the United Kingdom, India Education and Research Initiatives, and Renew Power Limited, the Ministry of Agriculture and Commerce, the Ministry of Welfare and Food and Consumer Affairs, the Indian Navy and the Indian Air Force. She is also a member of the ISO and BIS Sectional Committee on Sustainable Finance. Further, she is a member of the Investment Committee, IIT Delhi, the IRD Board, as well as the Senate of IIT Delhi. She is the Associate Editor of the Journal of Advances in Management Research, published by the Emerald, UK. The teaches course like venture teaming and financing, financial management, and the compliance for startups, entrepreneurial finance, corporate governance, and CSR professional ethics, managerial accounting and financial management, Indian financial system, and security analysis and portfolio management. Overall, she has 2 decades of professional experience, having spent 3 years in the corporate sector prior to joining academics. She has published more than 150 research papers in journals, national and international reputed journals. She has co-authored a textbook titled Security Analysis and Portfolio Management, published by Springer, USA. She has co-authored 4 research monographs titled Corporate Governance Mechanism and Home Performance Lessons from India, Financial Management Practices and Empirical Studies of Indian Corporates and Equity Markets in India, Risk and Price Multiples, published by Springer, USA, and Cash Dividend and Share Repurchase Announcements, Impact on Returns, Liquidity and Risk in the Indian Context, published by Hamilton, UK. She has been a recipient of the Lok Sabha Fellowship. It's really good to know that, ma'am. And Pension Fellowship from the Academy of Management, USA, for her work on CSR, as well as the National Stock Exchange, Indira Gandhi Institute of Development Research, Corporate Governance Research Initiative Grant. She has been honored by the Leadership Award in her research, which she accepted on behalf of IIT Delhi from the Institute of Business and Finance Research at Global Conference. So this is a brief profile about Sweta ma'am. Really, we are so fortunate, ma'am, for having for today's session. Thank you so much, ma'am, for accepting our invitation for delivering a session. Thank you, ma'am. Over to you, ma'am.
Thank you so much for those kind words, Dr. Srinivas, and thank you so much for honoring me with this invite. I can see some familiar faces here on screen. I think I met some people recently at JNU during the session, if I'm not mistaken.
Yes,
Or
ma'am.
maybe I met some colleagues, in the past at some fora.
I request you, yeah, please interact with ma'am.
Yes. So I would request, or I can see a huge gathering here, and Sir has asked me to speak to all of you on security analysis and portfolio management, and what has my experience been in creating this course and in teaching this course at IIT Delhi. But since 1.5 hours is a very short time to discuss one subject in great detail, I would request all of you to make it a highly interactive session, so that in case you are thinking on similar lines, please ask if there is anything that we can discuss so that the session becomes more productive. So I hope that I have that promise from all the participants. Yes, that it will be an interactive session and that you would ask questions or okay, great, great. I can see some hands there, so that's great. Yes, ma'am.
Yes, ma'am. So please come.
Okay, okay. So, as Sir has already mentioned, I've been teaching a number of courses ever since I joined IIT Delhi in 2010. But for the security analysis and portfolio management, this course is designed as an elective that we offer to our MBA full time students as well as our executive MBA students, which are basically working professionals who do their classes in the evenings with IIT Delhi. Also, a lot of our BTech students who do a minor in management are extremely interested in an elective on security analysis and portfolio management because, fortunately or unfortunately, these days a lot of our BTech undergrads prefer to do an MBA or get into the world of finance. And given their analytical skills, they have this very natural affinity for numbers, and once they do this course, they're able to then work with large investment banks, consulting firms, mutual funds, and so on. So it's a course that is very, very popular amongst all our students, and it's also very popular amongst working professionals. Now, because we teach undergrad, BTech students, and professionals as well, who may or may not have a formal background in commerce and accounting, the effort is to make the language of this course as simple as possible. And that is something that I would exhort all of you also to follow, because not many people may have a formal background in commerce, but they may be interested in investments. Even at the personal level, we may be interested in investments. And so the idea should be to keep the course language as simple and as decluttered from jargon as possible. So that was the effort. And at IIT Delhi, we give a lot of focus on research, and we pride ourselves in carrying our very own empirical research into our classes. So that's what is our USP. So for this, I wrote one monograph on equity markets in India, for which we traced the entire evolution of the National Stock Exchange from 1994. And over the past 2 decades, we saw how risk, return, price multiples have changed in our economy. And we also looked at the fundamental and technical analysis of different companies. So if you ever want to visit or go through these monographs, you can just do a Google, and maybe I'll show you the link online right now. But they are all published by Springer US. Then Springer, for the first time, is coming out with book series, that is textbook series in India. And for that, they approached me and they said that since you've been teaching this course and we would like this textbook to be written in a very simple manner for undergrad students, engineers across the world. So, very recently, I've also written a textbook on security analysis and portfolio management, again published by Springer US, which caters to students who don't have a formal background in finance. So, it simplifies the concept of money and investments to basically anybody. Okay. So these are two resources that I created specially for this course. And then I took my research back into the class. Another thing that I would like to share with all my colleagues here is that whenever you design a new course, please keep three things in mind. First of all, the course itself should be relevant and there should be a need amongst the student community for that learning. Always design very relevant courses that will ensure that you get enough enrollments and that the course becomes popular. Second, please look at that course from the purview of research, because as faculty members, we are all supposed to do research. And courses like these, which have a very practical implication, which are practiced every day, will ensure that you get a lot of research grants into this area. So, typical bodies that fund research in security analysis are SEBI, National Stock Exchange, Indira Gandhi Institute of Development Research. Even MCX has many research proposals going on. Also, if you look at markets, you can also look at it from a societal angle. And so, institutes like ICSSR, ICCR, would also be interested in funding. So try and make your course in such a way that you're able to use the learnings or the experience of that course also to attract research funding, because that is very crucial for the growth of any academy. The third is, by taking up a practical course like SAPM, you can also attract a lot of consulting and outreach. So, for example, SEBI conducts a lot of national level workshops where it tries to dumb down or simplify the world of security analysis and portfolio management for the common investor. So it attracts a lot of consulting also, and it attracts a lot of revenues as well. Excuse me, I'm sorry, I'm just recovering from a viral, so the throat is a little. Um, Now, recently during COVID, IIT Delhi was forced on the online platform. We were forced to deliver lectures online. Initially, we used to frown upon that. But once we became adept at delivering content online, we realized that that is also another very important revenue mechanism or source for us. So we have started what is called the e-Vidya program. Now, in e-Vidya program, we are able to offer courses like these, not just to our students, but to anybody across the world through an online medium. So this has also become an alternate teaching and revenue mechanism that we are now deploying. Okay, so whenever you look at a course, look at it from a wholesome perspective. It should be a popular course. You should be able to provide MDPs, EDPs on it. You should also be able to attract research and PhD scholars in that area. And of course, it should have the ability to help you write research grants and to also get consulting assignments. Now, a lot of my colleagues who are in tier 2 cities or tier 2 colleges tell me that, ma'am, we may not have the kind of avenues which are available to maybe you sitting at IIT Delhi. But I disagree. I humbly disagree. You have to look locally, you have to look regionally as to what are the requirements of the local or regional community around you. And that is the niche that you can fulfill. Okay, there is a lot of funding these days which is societal in nature, which is uh, you know targeted towards tier 2 cities. So please think locally and then try and expand to a international or global level. So please ensure that your catchment area, which is your own regional area, the community around you, the industry around you, the SME sector around you, please try and engage them. They are also dealing with a lot of problems. So you can take your courses and your expertise to reach out to them and fulfill whatever requirements they have. Okay, and there's a lot of funding these days which goes towards SME if you're trying to solve any issue with them. So, with that brief opening remarks about any course that we take, I would now like to share my screen and then. Do you want to share? Yeah. So, I hope Dr. Srinivas, please let me know when the screen becomes visible. Is it visible? Yes, I think so. Okay. So I am just going to take you to the Springer website, or maybe I can just write security analysis, portfolio management. This is by Springer. So if you can see this book, this is a textbook that I have written on security analysis and portfolio management. And this is basically in a very, very simple language to cater to anybody who doesn't even have a formal background in finance. They can also access this. The other is this one. So this book is also catered around looking at how returns have shaped up in our stock markets ever since NSE came in. What are the risk factors? How do you measure that risk? And what are price multiples? So price multiples are basically very popular ratios like earnings per share, price earnings ratio, price book ratio, and so on, which investors use as a basis for investment. So this book is also there. Also, my book on financial management practices in India, again published by Springer, also draws down on the basics of financial management. And then, you may say that equity markets then builds on those basics. Okay, so let me show you that also. And as a result of this, we got more requirements of writing a book on cash dividends and share repurchases, corporate governance mechanisms, and so on. So all of this came in from these initial books only. So this is that book, Financial Management Practices here. Okay, so I'm just showing you this so that you're able to access this content if ever you require it. And this is written keeping the Indian markets in mind. Otherwise, typically the books that we get are all foreign authors and they speak about the US markets. So this becomes better. Okay, now I hope that this is also visible now. Dr. Srinivas, is this slide visible? Okay, thank you so much. Okay, now when I teach a course on security analysis and portfolio management, I try and bring an element of practice or even an element of simplification in it. So typically what I do is I start with a role play where we divide the class into groups, and maybe 3 or 4 groups, not more than that. And one person has to behave like an investor. So we ask that person to create a profile, the group to create a profile of that investor. What is his age? What is his family background? Does he have dependents in the form of parents or children living with him? What is his salary? Does he have any other income sources? Is his spouse also working? Okay, is their house rented, or do they own their own property? So all of these, so we create a fake profile. And then of course there is one person in the group who's acting as an investment advisor. So we then ask the student to kind of prepare a questionnaire of what are the kind of questions that he or she would ask to assess the risk profile of the investor. And then we keep it very free flowing, and then we let these two people have a conversation and the group to observe this conversation. And then we have a debrief session on, through that conversation, how could you assess what is the risk profile of the investor and what are the kind of securities that you would suggest to the investor. So that gives them a very interesting feel of the real life. And we have a lot of discussions on what was the background and whether a person actually required that security at that point of time. So I start with that, so that kind of becomes a ice breaking session, and then we are able to keep that in mind as we move around the investment environment. Economics is the mother of finance. So I always start with these economic functions, and we look at the two basic type of assets in the world of investments. One is real assets, which is the real capital formation in any economy, the infrastructure that we build, the plant and machinery that we buy, the equipment that we set up. These are the real assets which would then lead to the production of goods and services in any economy. Financial assets are just mirroring the value of these real assets, or just helping transfer the value of these real assets. So we always tell them the basics that financial assets will always be rooted in a real asset. You will always have a real asset backing a paper asset or a financial asset. And this time we also introduce the concept of cryptocurrencies, and how, because they don't have a real asset backing them, they are very, very dangerous to use as an investment. Okay, and which we are seeing around us also with the volatility in cryptocurrencies. So we keep introducing these new aspects which are coming in, so that the student gets a holistic perspective about the difference between real and financial assets, and how money is actually measured, or how you use it as a store of value. At this time, we also may have a short discussion on the central bank digital currency, which the RBI is mulling, and that makes the conversation more contemporary. So I hope that everybody is okay so far. In case anybody has any doubts or questions, please feel free to ask. I may not be able to look at you, but I'm sure you can unmute yourself, and I'll come to you. then then there's a detailed discussion on real assets which have to be created. Capital has to be formed for any economy to grow. Okay, and so these are macroeconomic factors which I think should be the basis of any finance course. Okay, and then we look at what are the different kinds of financial assets, look at different kinds of securities, the nature of each security. So what is equity, what is debt, what is preference shares, how is it a hybrid instrument, why should a company issue preference shares, and so on. What is the difference between having a debt security and an equity security. And here we also have a minor discussion on corporate governance, and how companies need to be governed, especially through the route of equity. So my idea always in any elective is to give a larger perspective to our audience. So I always take links from macroeconomics, corporate governance, basic financial management, so that the learning becomes more complete. And it helps that I've taught courses on Indian financial systems and so on, so we have a lot of knowledge that we can take in from related courses. Then we have a quiz kind of a thing. It becomes fun learning. So are these following assets real, or they're financial? So we discuss patents, lease obligations, goodwill, an education, 100 rupee note, and many more such kind of assets as students then bring up on their own, because we have get them to be inquisitive about understanding these concepts. So we move on to this. Then I also introduce financial markets to them, because that is the basis of the trading or the development of new securities. So we understand why we need financial markets, how it helps in consumption, how it helps in the allocation or diversification of risk, and how it helps any company to separate the ownership, that is the governance, from the management. And here we generally end up having a discussion around the financial crisis of 2008, and how the financial markets were behaving at that point of time. Okay. Again, I bring them back to macroeconomic concepts of how any economy is divided into three basic sectors. the household sector belonging to people like you and me, who are providing the main factors of production, whether it's land, labor, capital, or entrepreneur. So it is us whose resources are then available to the business world or to the government in terms of these factors of production. We give our land, we work as laborers, we invest our capital, and we also act as entrepreneurs and create enterprises. The second and perhaps the most productive sector of any economy is the firm sector or the business sector. Now, these are the companies that have been set up specially with a productive process in mind. They are there to create products and generate services. Okay, so then we have a discussion on that. The third sector is the government sector, which is a hybrid sector. The government also behaves like a household sector in the sense that the government also gives its own land, its own labor, capital. Government also acts as an entrepreneur by promoting PSUs, as well as the government through its own administrative and business cadre also acts as a productive arm of the economy. So this is a typical three sector economy that we then introduce to the class. And I also introduce the fourth sector, which is very relevant these days, which is called the rest of the world. So in any open economy, for example India, we have these three domestic sectors, and then we have the rest of the world, which adds the fourth sector to our economy. Now, the rest of the world will also bring in their own factors of production. So, we'll come to India and invest their labor, their capital, startup companies in India, as well as it acts as a secondary market for our sectors as well. So, our own capital, our own labor, our own entrepreneurs can then access the rest of the world and develop products and services through them. So, we discuss these clients of the financial system. I also introduce the difference between savings and investments here. And we are then able to demarcate how savings would be different from investments. Another very important aspect that I bring about in the very beginning is that risk and return are two sides of the same coin. You cannot have high return without a higher degree of risk. And we also discuss how and why this happens. Okay. After that, I tell them that unless you have mitigated the risks prevalent in your environment or in your circumstances, you may not be able to enjoy the fruits of your investments in terms of the returns that you make. All of us know that you may be earning whatever 20%, 30% returns in the stock market, but these days, one trip to the hospital or one trip to the ICU would wipe out all these kind of returns because of the heavy and the very expensive cost of healthcare in our country. So I always advise my students that the first investment product that they should have is a risk mitigation product like insurance. Whether it is health insurance, whether it is life insurance, whether it is household insurance, the first aspect should be to mitigate your risk, to look at the factors that contribute to risk in your lives and to mitigate that. Once you have done that, you are now safe or you're now protected, and then you can start to take more risk by maybe investing in the stock market. Okay, so always mitigate risk first and then look at maximizing returns. So typically when I ask them what is the most popular investment product or security, they say, ma'am, mutual funds or stocks, but actually it is insurance. So insurance is a negative investment, because if you look at just the returns that come out from an insurance product, it is typically very, very low or even negative returns if you compare it with the inflation. But it helps you mitigate your risk factors, and that is the primary security that we discuss. Okay, so this is how I approach the course. Then this subject, security analysis and portfolio management, is so contemporary, and there have been so many ongoing technological interventions. In fact, AI, I should add AI here, because artificial intelligence is really turning around the world of investments. We have genetic algorithms on Wall Street which are able to look at huge amounts of data and spawn artificial intelligence networks to then predict future prices and future trades. So these days we have so many trade bots which are actually conducting trading at this mass industrial level, something which is beyond the scope of a retail investor. So, what are the trends? Globalization, securitization. In during the financial crisis of 2008, we saw the devastation that extreme securitization can bring in any market. So the idea should be to keep our securities as simple as possible. Creation of too many derived products. Okay, you must have heard of CDOs, collateral debt obligations, MBOs, mortgage backed obligations, which were all there during the financial crisis, a derivative of another basic product. Okay, so the idea should be to keep securitization as simple as possible, so that all the time there is a link to a real asset established. Okay, then we also discussed that probably information technology has impacted the world of finance like no other area. The In the world of investments, the the contract between the lender and the borrower can be customized to an individual's level. So the amount of financial engineering available in this field is second to none. So then we discuss financial engineering, contracts, forward contracts, futures, options, and all of that. Okay, so it's very important for any student of SAPM, security analysis and portfolio management, to appreciate the impact that technological advancements, technological innovations are bringing about in this area. Because whenever we send our students to work with an investment bank or even a consulting firm, they will be working with the latest AI innovations in that area. Okay, so it's important to introduce this to them as well. Also in IT Delhi, since we are living in a very multivaried institution, we have different departments of computer science, so we have a school on AI also. It is sometimes very useful for the students if they also speak to maybe an AI professor or maybe an IT professor who's working in the world of stock trading, or who is working in the technologies that are developing the world of investments. So maybe having a couple of lectures from these colleagues also will enhance the perspective that your finance students will get. Okay, then we discuss what investments actually mean. Okay, how are they different from savings? What are the different kinds of investment avenues available? What is the risk profile and investment avenue matrix available to any person? So instead of only focusing on, say, equity markets, only looking at, say, real estate, the idea is to develop a portfolio of investments and to give any investor the choice to choose from a wide array of options. So we discuss that. Then we also discuss what securities are, how are they regulated. Okay, and in this I always bring about the debate that had come around ULIPs, if you remember, the unit linked insurance plans. And at that time IRDA, the regulatory body for insurance, and SEBI had a massive fight on who would regulate ULIPs. Okay, so we discuss these securities, we discuss the aspects around their regulation, and this is a good time to bring in these different regulators of stock markets into the discussion in the class. Now here I'm not reading through each and every slide because it's not a class that I'm taking, but I'm sure that this PPT is available with all of you, and if you need any other material, I'm sure that I can provide that in case you need any other material on this. Then we come to what security analysis means. What is risk? How do we calculate risk? What are returns? How do we calculate that? And then basically, if there is a company stock or if there's a particular security, how do we estimate whether that security should be bought or sold? So typically the concept is, if there is a security that is undervalued, that means it is cheaper than its worth, then it's a good time to buy that security. Or if a security is overvalued, that is, it is priced at a level which is much higher than the base price or the fundamental price of that security, then that's a good time to sell. Okay, so how do we conduct this analysis? How do we understand whether a security is undervalued or overvalued? Is then what we start discussing. Okay, then we also discuss what a portfolio would mean. How do you create a portfolio? Typically, a portfolio is a collection of securities. And the idea behind a portfolio creation is to mitigate the risk coming from a single security. So, how do we get a portfolio that the effective risk of my securities comes down? So, how do we look at this? So typically here we do the Markowitz portfolio theory, where the basic postulate is that you should try and maximize your returns for a given level of risk. Or if if the returns are stagnant, then you should try and minimize your risk. So either maximize returns or minimize risk for a given level of returns. So how do we do that? Is the art behind creating an efficient portfolio. Okay. Then I also bring about a discussion on speculation, because typically students feel that, ma'am, Indian stock markets are so volatile, they are highly speculative, it's more like a gamble, it's more like a betting game, and so on. So I always tell them that please don't look at speculation in a negative way. In fact, speculation is what makes markets. If there was no speculation, we would have no trade, we would have no buying and selling of securities. So I try and break the negative myth surrounding speculation by telling them that speculation is what makes markets. So it's not a four-letter word, it is something that is essential for any trading activity to happen. Okay. Then, of course, we look at basic criteria and factors for investments in greater detail. So, we look at risk factors. What is the maturity of that individual or corporate? What is the credit worthiness? Okay. What is the nature of investment that they are looking at? What are the variability of returns, the risk profile? And of course, what is the tax liability? These days, a lot of investments are targeted towards tax saving schemes or to reduce your tax liability. So, what are those investments? Then, of course, we look at returns. How do we measure returns? What is a return emanating from a stock? Is it the dividends? Is it the capital gains? How do we add that up? And so on. Then we also draw matrices on the safety of funds associated with different investments. Liquidity is a primary concern for most investors. Okay, they don't want to lock their funds in because they may have a consumption requirement maybe a few months from now or a few years from now. So after looking at their requirement patterns in terms of the inflows of cash that they will get and the outflows of cash that they have to make, we then suggest different kinds of liquidity to them. Okay. And of course, any person who's wanting to exit an investment needs a market where you have enough buyers and sellers to be able to sell your security and get an exit. So, for that, for higher marketability, typically mutual funds are considered a safe investment. If you have corporate clients or if you have high net worth individuals, then the money market is a better deal for them. So, money markets are basically these wholesale security markets where overnight lending and borrowing also happens in wholesale. So the players in the money market are typically your large companies, banks, the government itself, high net worth individuals, and so on, not people like us who are retail investors. So the marketability of money markets, because it's a wholesale market, is probably much higher than your stock markets will ever be able to provide. Okay, so let me stop here and get some questions going. Otherwise, I can continue on this. So far, has there been any question, any doubt in your minds? Because nobody has asked anything, so I hope that it has made sense. Any questions so far? Okay. Is there any one of you who's teaching this course who would want to share their experience with teaching this course or doing research in this course?
Yes, ma'am.
Yes, please.
Earlier, I used to teach for MBA students from actually.
Okay.
Where I have a securities and finance and portfolio management.
Mhm.
There I find the difficulty for beta calculation and all actually. So first
Okay.
calculation actually.
Acha, okay. So, Dr. Srinivas, let me elaborate on that also now. Basically, when we move into fundamental and technical analysis of any security, in fundamental analysis, I start with the reverse funnel EIC approach. So, first we look at the economy, then we look at the industry, and then we come and look at the company, which is a part of that industry, and we look at what are the factors that give rise to risk factors in any company. So I look at business risk, okay, which is a risk that is coming out of having huge fixed costs, and we look at financial risk, which is the risk that comes out when you have a lot of debt on your balance sheet. And then we come on to technical analysis, which is basically looking at the timing of the market. So, technical trends basically tell you how the prices move in a security market. And based on that, how can you then decide that this is a good time to buy or this is a good time to sell and exit from the market? Now, beta is a measure of market risk of a security. You must have read about betas, aggressive betas being greater than 1, and so on. So beta is basically the covariance or co-movement of a particular company's stock vis-a-vis the underlying market. Okay, so underlying market, typically if you're looking at the Indian stock market, we should be taking a weighted average of all the company stocks available, and then we should calculate the average return, but that is not possible. We don't have access to that amount of data. The computation would be very, very cumbersome. So instead of taking the entire market, we take a proxy. That proxy typically that investors takes is either the Sensex, that is your BSE 30 stocks, or you take the Nifty 50, which is NSC top 50 stocks. Or if you're an intelligent investor or a broad based investor, you will take a much bigger index like the S&P 500 or the BSE 500, NSC 500, which is basically capturing nearly 90% of the total market cap. So if we take those returns at the base and we look at one company's stock returns vis-a-vis the underlying market, that measure is called beta. It is the covariance of a security's returns vis-a-vis the variance existing in the underlying market. Okay, now these days, so if your students know statistics, then it is very easy for them to understand covariance and variance. Variance is nothing but the square of standard deviation or the deviation from the mean, and through that we can tell them how to calculate betas. Once they have understood that, we can tell them a easier way also, and that is basically the way your security market line is going, the way the security is progressing. Beta is nothing but the tangent to that, just the tan theta of that security market line. Okay, so it's just the slope of that market line. So that also we teach them because that becomes easier to compute. But the concept is always rooted in the covariance concept. These days, a lot of websites like Yahoo Finance, Money Control, even National Stock Exchange, even any company's personal website, you have these real time beta calculations being done and shared real time 24/7. So, once the student has understood the concept of beta, it is very easy for them to get this data because it is being shared real time on all of these websites. Even if you have databases like Bloomberg, Thomson Reuters, CMI Prowess, Capital Line, all of them also have real time beta calculations which are readily available. Okay, so we ask students to take that. I'm sorry, was there a question? Okay. So we ask students to take that. And during this time, we also teach them a model which is called capital asset pricing model. If you heard of this, CAPM. Now, this model was awarded a Nobel Prize in financial economics because of the proponent of Professor William Sharpe, who developed this model, the capital asset pricing model, which uses beta to then tell you about the cost of equity or stocks in any economy. Okay, so we discuss about this model, and this is a very heavily researched model. A lot of my scholars are doing their PhDs on variants of this model, so it leads to a lot of research also. And recently we have the pharma French 3-factor model, pharma French 5-factor models, which are also improved versions of the capital asset pricing model. So we discuss that as well. Now, in technical analysis, there are many theories, many charts, patterns that we discuss, but I always tell them to look for 2 or 3 fundamental theories which are linked to the real value of a company. So, typical theories that I propagate here are the Dow Jones theory, okay, the support and resistance levels, on how you analyze that. And based on that, I tell my students to create a portfolio based on real securities, but instead of actually putting real money in there, they can play these stock games. So I give them simulations which are available through different databases like Bloomberg, Thomson Reuters. All of them allow you to simulate portfolios for a class on SAPM or investments. And then I tell them to track that portfolio for say 2 months, because typically this course is spread over 6 months. So for 2 months they track these portfolios and they make interventions. Okay, now I will buy this, I will sell this security, now I will hold this cash, and so on. And after 2 months they are supposed to make a presentation on the learnings from this simulated portfolio. Okay, so we do that as well. In fact, in one of my executive MBA classes, I had a gynecologist who was a student who had never understood money or finance. She was a doctor, but without telling me, she actually invested real money in this portfolio, and in 2 months she made a few lakhs. So she was so happy and so encouraged by that, that she said, ma'am, I'm to thinking I would go full time into the stock market. So these kind of simulations give your students a lot of confidence, and they are also able to then um, experience the vagaries of the stock market firsthand. Okay, so that is also something that we deploy here. So as you can see, a course like this has so many elements that you can involve from the world around you. It makes it so real and so experiential that the idea should be to, instead of making it a purely theoretical class, to get these students to actually get their hands dirty with investments and deal with these investments through the course. Okay. Then another thing that I do as an assignment is giving them a situation maybe of a young student who's probably going abroad to do a master's degree and is then working. So that's the background that we create, and then we give them a portfolio which they have to work around and then tell me why they have made a particular portfolio and how they're managing it. In this, we again have a lot of simulations that we use. Excel spreadsheet, basically, they are basic Excel spreadsheet simulations. And then we look at the importance of having cash, having liquidity with you, because then we will introduce scenarios like what happens if there's an accident in the family. Okay, what happens if the sole earning member loses his or her job? How would you ensure that the investments would take care of your livelihood, or your family's would supplement the family's income? And then they are churning the portfolio and working around it, so the knowledge becomes very, very comprehensive in this regard. Okay, so this is how basically I design the course and how I execute it, with a lot of experiential learning, lot of role plays, lot of simulations, so that the students are actually getting their hands dirty. And it's always a good idea to have a database, so that students are looking at real time evidence and data, and they are computing that instead of working with fictitious companies or fictitious numbers which may be unrealistic. Okay, so let me again stop here. How many of you are teaching finance courses, except for Dr. Srinivas, who shared his experience? Because if you would like to share your experience or any kind of difficulty that you are facing with your course, I'll be happy to discuss that. Dr. Srinivas, I think a lot of the faculty colleagues here may not actually be teaching this course, or may not even be teaching finance courses. Am I correct in my assumption?
Actually, we need to teach these subjects in coming semesters actually.
Oh,
As
okay.
per the used system, single major system.
Okay, so are most of our colleagues from finance? I'm sorry?
So few people having already experience with it.
No, so most of the colleagues are from finance area? So, Dr. Srinivas, I was asking, are most of our colleagues here from the finance area?
Yes, ma'am. Yes, ma'am. Accounting and finance.
Accounting and finance. But as you said that they have not taught this course, they have to teach this course going forward. Okay, so please feel free to ask me any questions that you may have, because you're going to be teaching these courses very soon in your careers. So since I have so much of experience teaching this course, in case you have any doubts or questions around the course development, please ask.
Hello, ma'am. This is Dr. G. Arun Kumar.
Yes.
Can you please suggest me what are the methodologies so that we can adapt in our classrooms to make the students understand this secondary analysis and portfolio management?
Absolutely, absolutely, sir. So, as I said, that this course is a very technical course, but it also has a lot of practical implications, because each one of us is involved in the world of investments. We are having savings, we are involved in the world of investments. So the methodology that you follow should be experiential. So, like I said in the very beginning, I start with a role play where I actually get teams to enact a potential investor and a member of the team to act as a potential investment advisor. So, through these conversations, how are you able to assess risk profiles of people? Otherwise, blindly, you can keep suggesting that in the world of securities, please invest in mutual funds, please invest in real estate, please put your money in an FD. But how do you actually assess the risk profile of an investor? Okay, it's a very subjective exercise. There is no calculation that you can deploy that this person is highly risk averse, this person is a risk philiac. So experiential learning is what will make your class more effective, rather than just giving an abstract concept about this risk profile is very high, so we will suggest this. How do you assess that risk profile? Also through simulations, sir. As I said, I give them a portfolio which is based on real companies, real time data. So like today is 21st March, I'll tell them to pick up a portfolio today and to track that portfolio based on today's data, and then have a horizon of 2 months, that is towards the end of the course, where they will then tell me how the portfolio was behaving over these past 2 months. Did they make any additions or deletions from the portfolio or not? So basically, without putting their real money, they're dealing with real companies. So I give them simulations which is based on, even if you don't have a database, you can go through the NSC's website, or you can go through moneycontrol.com, you can go to yahoofinance.com, and there you can have this portfolio which they can then track real time. Okay, a lot of my students create or get registered on brokerage firms like 5paisa.com, sharekhan.com. Okay, where as student registrations, they will get access to the real time data, and they can maybe just take a simulation from there. So you can encourage them to go and register on these websites also. Okay, sir. And then by this experience of actually dealing with different kinds of securities, looking at how technical indicators are giving you a hint on whether this is a good time to buy or a good time to sell, these students get their hands dirty with the real data. And as I was giving you the example of that gynecologist in my class, she actually, without telling me, invested real money on in that portfolio. Okay, so the idea is to give an experiential learning to the students, so that at the end of the course, they have the confidence and the skills to actually design a portfolio and execute that, because that is what they'll be doing if they go and work with any consulting major or mutual fund or any investment bank. So I hope, sir, that this has given you some idea of the kind of assignments and the kind of teaching methodologies that you can use. So role plays, simulations, okay, and basically looking at a portfolio and designing it and then executing it. So, sir, I hope that that question has been answered. Would you like to discuss something more?
No, ma'am. Thank you so much for your briefing.
Thank you so much. Thank you so much. So please don't feel,
Madam,
yes.
good morning.
Good morning.
We are from Srikakulam. My name is S.
Okay.
Iswara. So,
Okay.
is it Sharpe technique is essential to calculate or to evaluate the portfolio?
Yes, absolutely, sir. You're so right. So, towards the end of the course, we have a session on portfolio evaluation techniques. Okay, so there we have the Sharpe ratio, the Trenner ratio, the Jensen's alpha. But my most favorite is looking at a portfolio returns before interventions and after interventions. So, this is called I think, the Titman model, because Sharpe and Trainer basically look at risk return profile. Okay, so what was the risk, what was the return that you got, which is very intuitive. But whenever I'm looking at portfolio evaluation, I should be able to assess the difference in portfolio returns that an intervention got me. So suppose I'm a portfolio manager and you've given me a portfolio with X returns and Y risk. I should be able to, through my own understanding, maximize your returns as well as minimize your risk. So, what is the pre and post intervention portfolio scenario should be the ideal measure on looking at the impact of intervention. Otherwise, any portfolio left by itself will also give you some returns and would also have a risk parameter. So, we teach all of these measures and we also look at the Titman model. Okay, sir. So definitely that's a
Actually,
very important part of the curriculum. Very important.
madam, then
G. Yes.
on the part of the student, it is standard deviation is more, I think, comfort to the students to calculate the ratios.
Yes, so standard deviation, because typically our students who are coming from a technical background are very, very good with numbers. So they look at standard deviation as a measure of risk. But as academicians, I always tell them that coefficient of variation is a better measure because it gives you a relative measure of risk. Risk is always relative, right, sir? So coefficient of variation, which is nothing but the standard deviation divided by the mean of the sample, gives a relative measure of risk versus return, and it also takes into account the size of the deviation. So that coefficient of variation we typically propagate to be a better measure than just taking the absolute value of standard deviation. I'm very happy to see these technical questions coming in, sir. It shows that you are teaching this course and that you're familiar with this course. So that is how you're able to ask these questions. So thank
Thank
you
you,
so
madam.
much. Thank
Thank
you,
you so
sir.
much.
Thank you.
Thank
Thank you so much. Anyone else? See, this course is taught over a semester. Okay, so obviously there is so much more detail to the course than what we are discussing in this 1.5 hours. But the idea,
Hello,
I'm sorry.
madam.
Yes, yes, sir.
Can you explain the importance of fundamental analysis and also technical analysis? So, what is the importance of knowing about that one before going to invest in stock market?
Sure, sure, sir. So both these analyses are extremely, extremely important, sir. And I always believe that fundamental analysis probably takes precedence over technical analysis. I'm sure most of us have heard about Warren Buffett, who is the greatest investor of all times. He is a fundamental investor. All he does is looks at a company fundamentally. How is a company behaving fundamentally? What are the strengths and weaknesses of the company? What are the areas where the company is providing great returns, and what are the risk factors? And based on that, he draws an assessment of whether a company is undervalued or overvalued. He looks at undervalued companies and buys controlling stake in those businesses. He doesn't sell. Okay, that is the definition of a fundamental investor, that you actually buy controlling stake and you remain the owner of that business forever. Okay, so I would always place emphasis on fundamental analysis more than technical analysis. So fundamentals may first we look at the economy. What is the shape of the economy? What is the economy generally faring? Then look at the industry within those economies. What are the industries or sectors that are doing well? For example, renewables are growing, ITES is growing, okay, finance sector is growing. And then within the sectors which are on a high growth trajectory, which are the companies who are market leaders within that sector? Okay, so that would give me a fundamentally strong company within a growing sector in a growing economy. Technical analysis, on the other hand, is just looking at market movements. We are not looking at any companies, we are just looking at price movements in the stock market. And there are various theories like Dow Jones, Fibonacci series, head and shoulder patterns, butterfly patterns, which we are then just trying to assign a pattern to the movement of prices in the stock market. Now, what this assessment helps us understand is whenever the stock market prices are coming down, because see, every market, every country, every economy follows a cycle, follows a business cycle. There are crests and troughs. Okay, so once you understand that pattern, whenever there's a trough, that is, there's a downward movement in prices, it means that the securities will become cheap for you, and that is a good time to enter the market by buying securities. Whenever the market is growing through a crest and it is growing up to the maximum level and then coming down, that maximum level is the best time to sell. Okay, so then what I teach my students is, please look at your investment horizon. 3 months, 6 months, 5 years, whatever is your investment horizon within which you want to make 10%, 20%, 30% returns. Look at a company that is fundamentally generating that kind of profit level. So if you look at our economy, which is very top heavy, the top 200 companies in our Bombay Stock Exchange, which together control 85% of the market cap, have a net profit margin of 14 to 20% year on year. Okay, this means if you simply follow a strategy of buy and hold in the stock market for at least 3 years, returns of 14 to 20% are not going anywhere. Then when you look at the second half, the bottom half of our market, which is the SME sector, the small and medium sector enterprises, there the returns are 25 to 40%. Okay, but the risk also is much higher because these are smaller companies, these are startups, and they would be battered and buffeted whenever the market is in crisis, or there's a recession, or there's a downturn in the economic activity. So high risk, high return. Lower risk with top 200 companies, lower returns. Okay, so once you pick up a fundamental company that is giving you the kind of returns that you're looking at as an investor, just look at your investment horizon and match it with the technical indicators available in the market. So if you're looking at 6 months as your investment horizon, you have to look for a security that crests, that goes up and comes down within those 6 months. And that would be a good indicator for you to buy and sell. So basically, look at fundamentally strong companies, match it with the technical indicators so that it matches with your investment horizon. So if you know when to buy, when to sell, that's it. Okay, so both fundamental analysis and technical analysis go hand in hand. But if I have to give one preference over the other, it will always be fundamentals over markets, because securities will give you different technical indicators, there's no problem, but fundamentally the company should be strong so that you as an investor don't lose out on your money. Okay, also another thing that I tell my students is, whenever you are investing purely in the stock market, please ensure that you are investing what is called pin money. Pin money is that cushion money which, even if you lose due to vagaries in the market, so suppose I have a 6 months investment horizon, and at the 6th month when I was going to exit the market has gone down into a bearish segment and the prices are depressed. So then I suddenly lose my money, lose my returns, and I'm not able to take care of whatever consumption I had in mind. So please ensure that whatever money you're putting wholly in the stock market, because they are very volatile markets, this money is your cushion money. And what I do is, suppose I have to exit the market in 6 months. Instead of getting greedy at the end of 5 months, that no, the markets are growing, they may grow even further, I may get more than 20% returns that I wanted in the beginning, we have to detach ourselves and exit the market the moment we book our profits, because timing is crucial in the stock market. Okay, so if you want to prevent heart attacks, if you want to prevent people from losing faith in the stock markets, the best idea is to be detached, and exit the market the moment you book your profit. So if I'm looking at 20% returns, the moment my security gives me those returns, please book your profit, come out of the market. If you feel that no, the market is continuing to grow and I have so much more funds at my disposal, re-enter the market, definitely. But a lot of people who lose money in the stock market don't sell when they are supposed to. They feel no, the market will grow even further, so let us wait it out, let us see, and we will sell at a time. And then by the time the market collapses, goes into a correction, and they feel no, my hands are burnt, I will never touch any stocks again. So this, so stock market becomes a kind of a spiritual journey also. So I teach my students that look at Bhagavad Gita. What they tell you is be detached from the outcomes. Okay, the moment you are getting your profit booked, please book it, exit the market. Please don't get attached that no, the stock market is increasing, I'll become the next millionaire, so I will continue to be here. If you do that, I promise you, you will never lose money in the stock market. Never. Okay. So these kind of behavioral, and see, stock market is nothing but consumer behavior, right? I mean, this is a product, it's a financial product. So also putting in aspects of behavioral finance. So in behavioral finance, which is a new emerging area, in fact, it's becoming so popular these days, it's being taught as a separate elective. In that, we have information processing errors, we have behavioral biases, which we also introduce to our students so that they understand that, all of us are human, and we do have some biases that creep in into our investments. So once you understand, you'll be able to guard yourself against these biases and maybe not get caught under these information errors. Okay, so we also introduce a module on that, but these days behavioral finance is doing so well that it's being offered as a separate elective also. Okay, so I hope, sir, that that kind of helped in that discussion.
Thank you, madam. Madam, do you have invested directly in equities, madam?
Yes, I have.
Suppose what is the difference between the direct investment and also mutual funds? Which is best one?
So I would ideally advise everybody to go through mutual funds, because we are professors, we have a full-time job, we may not have the time to actually track stock markets and individual stocks independently. But there are many people who like to track stock markets personally. So I have a lot of friends who have full-time jobs, but they have gone through brokerage firms like 5paise and Share Khan, and they are investing directly into the shares of a particular company. But for people who don't have the time or the inclination to follow stock markets every day and make interventions, mutual funds is the safest way to go, because mutual funds will ensure a professional diversification of your portfolio. It is their business to do this day in and day out. They will keep a track on your investments, they will be in touch with you almost on a daily basis, and you can keep telling them about your changed circumstances. So then what happens is, you are then detached and you're able to concentrate fully on what you're doing as a day job, and there is a professional setup that is taking care of your investment. So for people who don't have the knowledge or the inclination or the time and energy to track the markets personally, mutual funds are the best way to go. Another thing that I would suggest is SIPs, systematic investment plans, in which case you don't need to put a lump sum into the stock market directly. Every month you can decide on a budget depending on your consumptions, your salary levels, and so on. 5,000, 10,000, 20,000, whatever is your cushion money. Every month you can keep putting this money into the stock market. Now what happens is, because of the fluctuations in the stock prices, by putting in money at continual intervals, you actually end up reducing the average price per share. Okay, so a SIP is also a good way, especially for small investors who don't have a lump sum to put in stock markets. Every month you can keep putting aside some money and just hold. If you are buying and holding stocks for at least 3 years in the Indian stock market. As I said, because of the fundamental generation of 14 to 20% net profit margin by our top 200 companies, you will get those returns over the long run. It is just that your timing should be when the markets are doing well, you should exit the market, not get caught in that attachment that no, the markets are going to grow further, so I will keep waiting. Because what happens is when prices rise, there's a natural correction that comes in. So, for example, right now, our stock markets are correcting. If you're seeing in recent days, the stock markets are coming down, okay, they are correcting. And in fact, a lot of analysts feel that just before the elections there will be another massive correction. So if you keep waiting then and the markets correct, you end up losing your investment, and that is when you feel very upset with the stock markets. So the moment you have hit that 20% 25% return that you're looking at, please exit the market, please book your returns. If you still have a longer investment horizon, please re-enter the market. There's nobody who's stopping you from re-entering the market, okay? But please keep booking your profits the moment you hit that sweet spot of 20% 25%, whatever you're looking at. And this 20-25% is nothing but the difference between the support and resistance prices. So if the support price, that is the minimum price, is 100 rupees per security, and the security goes up to 120, if this is what you've been able to get from the pattern, it means you can buy at 100 and exit the market at 120 and make a 20% return. So day traders, technical traders do only this. They don't look at the underlying company. They only look at these price differentials and they keep buying and selling based on this. That's it. So for people who prefer technical analysis, Rakesh Jhunjhunwala is the person to look up to. He's a day trader. Okay, but my personal favorite is Warren Buffett, because I feel that when you buy shares of a company, you actually become owner of that business, and that is a fundamental responsibility of that owner. So I like Warren Buffett's philosophy because he behaves like an owner of a business, unlike most shareholders who believe in buying and selling quickly, so they don't capture the actual essence of owning a business. That is my personal favorite. But when for day traders, I think Jhunjhunwala ji is a very very good example. So I hope, sir, that helped.
Thank you, madam. Thank you. You have given very
Thank
good.
you, sir. Thank you so much, sir. All the best, sir. Anybody else? Okay, so only 5 minutes are left. So I would suggest that all of you who have been mandated to
Madam?
develop. I'm sorry.
Yeah, madam, very good morning.
Good morning.
As you referred somewhere in your discussion about Bhagavad Gita says that there is a detachment, and then you said you don't need to have an emotional towards the what you wanted to. So in that context, what I wanted to put before you, see, when you refer the literature in SAPM, most of the authors will come across European countries.
Yes.
With your rich experience, if you have any idea about the Indian literature on SAPM, please throw light on this.
Sure, sir.
That is my first question. The second question is, if any softwares are available for the classroom simulation games in the lab, the software must be a free software. If it is there, please put it across to us so that the faculty will be utilized. Thank you, madam. These are the two questions I wanted to put.
Okay, sir. Thank you so much for those questions. So to answer your first question on whether there are Indian writers and theorists on this area, I'm sorry, but there are not many. In fact, that was the reason why Springer US approached us to try and give a perspective on the Indian stock market, because that was something that was totally missing. Now, typically the authors that are doing well in this area, Breely Myers, then you have in Indian authors Professor Prasanna Chandra, who's tried to write about stock markets in a simple language, but we didn't have any hardcore research or empirical evidence coming out of the Indian equity markets. And that is why Springer approached us. And these books are probably the first of its kind, because when we write any research proposal, we have to do a lot of literature review on the state of the art of research in that particular sample, say the Indian stock market, and we didn't find any. And that is why Springer commissioned us to write these 3 books, so that we could then give a perspective. So we take a lot of, with a lot of humility, we take a lot of pride that this kind of work. Before this, Professor LC Gupta, who had headed a committee in SEBI, had published a book on just stock market returns, only returns. He had not looked at risk profiles, he had not looked at price multiples and all. So I had seen that book, and after that, a comprehensive piece of work is are these 3 titles that I have just shown you. Secondly, there are, as I was telling you, there are various databases and softwares available which you can use in your classrooms, in your institutions, to create simulations. In fact, Bloomberg and Thomson Reuters have simulated game rooms as a part of their database, because a lot of their data is used for trading worldwide, but these databases are very expensive. In fact, even IIT Delhi struggles to buy them. Like, for example, we've just said no to a Bloomberg terminal and we are saying yes to a Thomson Reuters, and the basic license is costing us some 35 lakhs. So uh, you may not have the budget as an individual department to have that, but in case you can convince your university, like in IIT Delhi, now we have centralized procurement of databases. So instead of each department and unit buying different databases, there is one database bought centrally by the library, and every other department uses that. So in case you can do that, these will be excellent. Otherwise, there is one database called Ace Equity, which is based on the lines of Capital Line, and it costs some 1 lakh rupees per annum. So that is a cheaper database, but it has only access to Indian stock market data, not worldwide stock market data. So maybe you can look at that. Then another database that you can look at is Center for Monitoring of Indian Economy, the CMIE Prowess database. In fact, I'm sure that a lot of you would already be having Prowess databases in your central library. This is also a very cheap database, and you can use that. But for free, if you want to, use something that is available for free, then maybe Yahoo Finance or moneycontrol.com also gives you real-time data on stock markets, on beta and so on. At least that you can use, and then you can help them create a portfolio and simulate that. So that's for free. Also, you can tell them to register themselves on 5paisa.com, sharekhan.com, and use that as a trial kind of a thing to then simulate a portfolio for themselves, and then in a fictitious manner just manage that portfolio for 2 months. So these are some resources which are available for free, which you can use. But if it is possible for you to get one such database, then the benefit with that is that they have international data, so you can look at international portfolios. You're looking at real time reports, consultancy reports which these companies are generating, and they have inbuilt simulation mechanisms. So these people come and they conduct workshops for you, so it becomes very, very useful. And this is what most stock exchanges, most companies are using to train their executives. So they have real time experience of working with these databases that they would be working with when they go and join a job. But I understand that finances are a big constraint, especially with centrally funded institutions like ours. So in that case, you can look at Ace Equity, you can look at Prowess, you can look at Money Control, you can look at Yahoo Finance, and so on. Registering on Sharekhan, 5paisa, all these you can look at. These will be free of cost. Okay, sir?
Thank you, madam.
Thank you so much, sir. All the best. Thank you.
For your elaborate session. Request Dr. G.
I'm-
Kumar, please respond to the question.
Thank you, ma'am. First of all, for making
I'm sorry, sir, but I think there are two, three voices coming together and I'm not able to understand.
Thank you, ma'am, for making this online session so interactive. Usually, online sessions are boring and they make us sleepy. But today, your lecture, your knowledge has made us uh, knowledgeable. And I think today I stand before you with my heart full of gratitude and respect for you, ma'am. And I extend my sincere vote of thanks to Professor Sweta Singh from IIT Delhi for her invaluable contribution to our academic journey. So, in spite of having your sore throat, having your infection, I think today's your lecture shows us your dedication and your commitment towards your profession. And I think people like us will be learning from you that we should be sincere to our profession. Thank you, ma'am, for briefing us today on your different aspects like what are the different types of assets, and you made us understand what is security analysis, what is the criteria for making investments, and you told us how to make students teach this subject by using simulation and also through experiential learning. You spoke about the investments and difference between investments and speculation, CAPM, and too many topics. But since the time is short, I once again thank you so much, ma'am. आपका बहुत बहुत धन्यवाद है आप इतने दूर से हमारे लिए आपने इतना कीमती वक्त गुजारा और हम हमारे अध्यापकों के बिहार से मैं आपको बहुत धन्यवाद करना चाहता हूँ थैंक यू मैडम
Thank you so much, sir, for those kind words. And I'm grateful to Dr. Srinivas for inviting me for this. And thank you so much कि आप सब लोग ने patiently इसको सुना. And we are all colleagues here. So we are all learning from each other. That is, we have a small family, small community. So I wish all of you all the very best for your future careers. And please feel free to reach out to me in case of any help, any assistance that I can be of. We are all here to learn from each other. So I wish all of you all the very best. Thank you so much, sir. Thank you. Namaskar. Namaskar. Thank you. Thank you.
Dear friends, ప్లీజ్ అందరినీ కొంచెం త్వరగా అసెంబ్లీ అవ్వమంటారా? ఆ టీస్ అవి కూడా లోపల సర్వ్ చేసి మనండి.
మాట్లాడకపోతే
గుడ్ మార్నింగ్ మేడం. నాశాంతి మేడం గారు గుడ్ మార్నింగ్. బాగున్నారు మేడం? అదే లైవ్ చూస్తున్నాను. థ్యాంక్ యూ.
Madam gave excellent. సార్ మిగతా ఎన్ఆర్సీస్ అందరూ కూడా కొంచెం క్విక్ గా జాయిన్ అవ్వండి సార్. సార్ రెస్పాన్స్ కూడా డిఫరెంట్ సెంటర్స్ నుంచి అయితే బాగుంటా ఉంటది. పార్టిసిపెంట్స్ రెడీ చేయండి కొంచెం. సో టీ బ్రేక్ నుంచి త్వరగా రావాలి. ప్రొఫెసర్ ఆల్రెడీ వెయిటింగ్. నవీన్ గారు సార్ రండి ఆన్లైన్ లోకి. ఎలా ఉందో వాయిస్ చెక్ చేద్దాం. మేడం నవీన్ గారు. నవీన్ గారు ఎన్ఆర్సీ విజయవాడ.
బాబు శ్రీనివాస్ గారు.
నర్సిరెడ్డి గారు చెప్పండి.
హలో.
వినపడుతుంది చెప్పండి.
ఇది మనం ఇప్పుడు ఆఫ్లైనే కదా?
ఆఫ్లైన్ కాదు ఆన్లైన్.
ఆన్లైనా?
ఆన్లైనే. షెడ్యూల్ తీసుకోండి కొత్త షెడ్యూల్.
సరే సరే. కాదు మన ఎక్స్పెక్టేషన్ ఎక్కడ వాడకపోతున్నాం మనం.
సార్
శ్రీనివాస్ గారు
లైన్ లో ఉన్నారు, వస్తున్నారు.
విజయవాడ
అందరినీ రెడ్ కలర్ తో టైం టేబుల్ పెట్టాను చూడండి సార్. అది ఇప్పుడైతే ఆన్లైనే. ఓకే
శ్రీనివాస్ గారు.
సార్ సార్ అంకారావు గారు.
ఎన్ఆర్సి విజయవాడ.
అంకారావు గారు
వినపడుతుంది కదా? వాయిస్ క్లియరా?
సార్ వినపడుతుంది సార్. నవీన్ గారు పక్కనే ఉన్నారా?
నవీన గారు వస్తున్నారు వాయిస్ చెకింగ్ కోసం. ఓకే థ్యాంక్ యూ.
ఆల్రెడీ ప్రొఫెసర్ గారు పెట్టారు మెసేజ్. సార్ మన మురళీకృష్ణ కూడా ఒకసారి మురళీకృష్ణ సరళ చేయమంటే సార్ చెక్ చేస్తే పెట్టారు. చెక్ సార్ గారు సార్ గారు సార్
శ్రీనివాస్ సార్.
మేడం రెడీనా? ఓకే ఉండండి సార్ పిలుస్తాను. ఇంకా ఆన్లైన్ లో పిలుస్తాను. ఒక నిమిషం. మీరు కనపడలేదు వీడియోలో?
ఇది మాది కొంచెం మైక్ సైడ్ కొంచెం.
ఓకే నో ప్రాబ్లం నో ప్రాబ్లం. నాకు అంకారావు గారు కనపడుతున్నారు. ఆఫ్టర్నూన్ సెకండ్ సెషన్ మాత్రమే ఆఫ్లైన్ అండి సార్. రెండోది Sharmaji. Sharmaji, please switch on your video. Sharmaji, am I audible to you?
I think people are still settling. Should I wait for some time or start? No, I can. I'm just asking, should we start or wait for some more time?
Namaste, Sharmaji. Sharmaji, am I audible to you? Your voice is not coming. Sharmaji. Sharmaji. Sir. Sharmaji.
Yes, correct? Ji. Voice is not coming. Okay. I have already unmuted. Okay.
Yes, sir, yes, sir, yes, sir. Now it is coming. Okay.
Is it fine now?
Yes, sir, yes, sir.
Is it okay?
Yes, sir, yes, sir, yes, sir.
Okay.
Okay.
Is
Thank
it
you so
fine?
much.
Volume?
Yeah, 1 minute. Give
Volume
me
is
one.
okay?
Yes, sir, yes, sir, yes, sir.
Should we start?
So much, Sharmaji, for accepting our invitation for delivering a session. I request Dr. Navina ma'am, please introduce our eminent professor, Ashok Sharmaji. Navina ma'am, over to you.
Yes, sir. Thank you so much, sir. Good morning to all of you. My name is Dr. K. Navina, NRC Vijayawada. It's my pleasure and honor to introduce CA Ashok Sharmaji. Coming to his academic qualifications, he is BCom Honors and an MCom from Delhi University, and his professional qualifications are Chartered Accountant and Company Secretary. So coming to his experience, he worked as Associate Professor in Dr. Zakir Hussain College, University of Delhi for 41 long years, and he has been in practice as chartered accountant for 41 years. He is having experience in finance, financial management, taxation, audit, system development, and control management. And he has been convener of the taxation study group of NIRC of the Institute of Chartered Accountants of India, New Delhi. And he has been advisor to the taxation study group of NIRC of the Institute of Chartered Accountants of India, New Delhi. He has been a member, special invitee of Board of Studies in Institute of Chartered Accountants of India, and a member in various committees of the Institute of Chartered Accountants in India for his division of guidance, tax audit, quality review board, etc. So now I invite CA Ashok Sharmaji to start his session. Thank you, sir.
Namaskar, everyone. Good morning. So I first of all thank Mr. Rao, Professor Rao, and your institution to give me an opportunity to interact with you people sitting on the southern side of the country. I am speaking from Delhi. Now you are undergoing the whole number of lectures covering different topics. The topic discussed with me is financial markets and investment. We will break this into two parts. First is what is financial market? What are the components of financial market? and what are the avenues of investment, and in which investment you should proceed, and if yes, how. Looking into your objective, your purpose, your risk-taking capacity, etc. Before I proceed with the topic, let's see the whole background in which we are talking about the financial market now. If you look at your syllabi also, maybe 15 years ago, 20 years ago, I don't know whether it was part of the syllabi. In Delhi University, it was not so. My voice is sufficient, Mr. Rao? Voice level is fine?
Little bit louder. Little bit louder. Please respond other centers. Voice is clear or not? Not clear. The other centers, they are telling they are not clear.
Is it fine now?
Yes, sir, voice is clear, sir. Crystal clear.
With some message I have received, not clear.
Yeah, no, it's okay.
Okay, sir.
It's okay, fine?
Okay, fine, sir.
So, I'm just talking in the background. This topic of financial management or the financial market or investment was never discussed. It was taken as a taboo. People were not talking about it. And in the university syllabi also, I think it was not there much. In Delhi University itself, it has come few years back, maybe 10 years or so. Financial management, definitely you all must be aware of, but that is something different from financial markets altogether. Before we talk about financial market, let me take the basic purpose and objective of the financial market. And what is the relevance of financial market as a country, and how does it affect the status of a country? It is said everything is in cycles. Nothing goes up and up. Everything has a cycle. If you look at the history of India, 400 years back, India was one of the most developed economy of the world. If you know, India was comprising 33% of the GDP of the world. Now, India's GDP contribution to the world is only 2%, minuscule. The means from such a high level of 33% contribution, it has come to 2%. US, which was having a contribution of 30%, it has come to 28-25%. Japan, which was contributing a lot, is also stabilizing, not any growth. Europe also is matured, stabilized growth of some 0% here and there. But India, from 33% has come to 1.5% or so. Now it is near about 2% of the GDP of the world. Now, what has changed? What should be done to make this developed country developed again? And what is the role of the financial market? Financial market will come subsequent. The economy, the structure of the economy, that will come first. So we need to understand how our economy is performing. What is the structure of our economy? India's economy, if you bifurcate, you will see around 53-54% is the contribution of service sector. Around 18% is the contribution of agriculture. And remaining 25+% is the contribution of industry, out of which 16 odd % is the contribution of manufacturing. Manufacturing is part of industry. Now you look at any country, maybe US, Europe, China. Any development in the economy comes only from innovation and manufacturing. Manufacturing also of the innovative product, high quality, sophisticated, advanced technology products. Now, India is more a agriculture denominated economy. It is dominated by agriculture, and we see more than 60% of the population of India is dependent upon agriculture. Means 60% population depending upon 18% of the income, whereas 10% of the population is dependent upon 53% service sector income. We can see a big disparity. That's why we see a lot of disparity in India. Farmers are poor. They are not able to earn. So what is the way to take this country, which was a developed country at a stage, has come to the stage of underdeveloped economy country, and now coming out, moving up again, and it's a developing country and is aspiring for being a developed country in the times to come. If we look at the whole history, I give you an example of Switzerland. If you read the history of Switzerland, 100 years back, a similar situation was in the Switzerland, but on the other extreme. 95% of the people of the Switzerland 100 years back were employed in agriculture. And it was not a developed economy at all. But if you look at the things today, Switzerland is one of the most developed economy. And not 95% people, it is only 3% people of the population which is engaged in agriculture. So from 95 it comes to 3%. And the size of economy goes to $8 trillion plus. That too with a small population. And if we compare our per capita GDP of around $2,600–2,700, they have $1,10,000. So these two countries, India and Switzerland, so that is showing us the path. That tells us how can we convert ourselves into a developed economy. Only path is innovation, manufacturing, research, employment to the people. Now, what is the role of the government? Government has the basic responsibility of providing the platform for these things to happen. Government should be able to provide proper infrastructure. Government should be able to provide working, comfortable, conducive environment. We call it ease of doing business. Government should create a platform so that the foreign direct investments can come to India. Government can provide tax structure. It can provide schemes like production-linked manufacturing schemes so as to incentivize the industry to manufacture. Because it is the manufacturing which provide a big employment. But in manufacturing also, If you are manufacturing the normal product, you will not be getting a good income. In manufacturing, if you are having a highly sophisticated, advanced technology product innovated by you, then only you can add a lot of value to your product and there are a lot of addition to your economy. Small example, most of you must be using iPhone, or maybe some of you may not be using iPhone. iPhone is one of the most advanced mobile phone. Whatever features, safety it has got. Now, iPhone is being manufactured in China, but it is the product of Apple, and the profit of Apple is higher than the GDP of many small countries. Now, what percentage of profit China is making? Only 25 to 30% of the total value of the product. Means the major profit goes to USA. Why it goes to USA? Because it is the brainware, it is the sophistication of the technology, the features which are provided, and money being spent in the research of those things. That's why we keep saying every time new product keep coming. And nobody till today has been able to beat Apple in terms of its position in the mobile phones and also in laptops, etc. But more I'm talking about mobile phone. So my thrust here is that it is that innovation, that technology, that sophistication that is being added to the product, and that is resulting into major profit to the company in USA. Whatever software, whatever technology, whatever feature they develop, the profit is on account of that, not plain contract manufacturing as China is doing. Now, China has its own problems. So the manufacturing is being restructured. India is working on creating research. The government has dedicated a fund of around 1 lakh crore for funding research and innovation. So if we research, we innovate, we get some new product, then our economy will also thrive. And then only we can think of coming to the position of a developed economy. If you look at the condition of India, 10 years back, we were in the position of 10th in the whole world in terms of GDP. Now, in the last 10 years, we have come to 4th. Recently, we were 5th. Now, it is expected soon, within a year or so, if we continue like this, then we may be in the 3rd position. America number 1, which is having 28% of the or 27% of the GDP of the world. China around 12%. India 2+. So it will be something in the 3rd place. So for all this, what is the role of the capital market, financial market? All these activities, all this manufacturing, all this real estate, all this infrastructure, it goes only with the money, with the funds, the real money. Now we say it is the basic responsibility of the government to provide the people of the country, the citizen of the country, the habitats of the country, good quality of life, good living conditions, a happy environment, clean environment, work conducive environment. But government needs money also. So if economy grow, they get more taxes, and then they get more taxes, then they can spend that money in creating infrastructure. If economy does not grow, government has to borrow money, and that is called fiscal deficit. Now, government of India or India had around 6% fiscal deficit. There was a period of Corona, a lot of money was spent. Receipts were not correspondingly there. Now our fiscal deficit is about 5.7%, which is estimated to be 5.1% by the next year. And we have a target of 3.5% to 4% in times to come. But as of now, we have no option but to borrow and spend money creating infrastructure, roads, airports, ports, telecommunication, digitization. Whatever things I am talking to you, every word is talking about an industry. And when we talk about the stock market, when we talk about the investment, we have to draw our strategy of investment from these items only. So we have to see people consume fairly well. They have a good standard of living. So for this, sufficient money should be available to the pockets of the people. People who do not have food, they should be provided food so they can spend money for meeting their other needs. This is the job of the government. I think government is doing fairly well. Definitely, there is always a chance and opportunity to improve. Now, if I come back to the capital, ultimately government will provide you a platform. It will provide you a conducive environment. But ultimately, it is the industry which has to be proactive and create capital, create facility and infrastructure. Government can build road, it can build port, it can build airport. But it is the industry which should make use of it, because transportation costs will be reduced, time of transportation will be reduced. So these are the things the industry has to do. So now industry, government is spending around 11 lakh crore in the infrastructure. In this budget, 2.5 crore plus is on the railways, quite a huge amount, which was the most neglected sector. Something here and there was happening every year. Now a lot of focus is there on that. Why? Because it is said the cost of transportation of goods by the railway is 1/3 of the cost of transportation by road. There is no wear and tear on the road, no tires are required, diesel is not being consumed, pollution is not there. So railway and a lot of railway, 40,000 kilometer railway line they're talking about. So once it is there, your cost of production will be less. And then you are in a position to use that money in innovation, in research. Or you can compete with the supply made of other countries, which are quite economical as compared to that of India. Now, if we come to, these are the whole background and the platform. Now we talk a term called aspirational India. India has got aspirations at two levels. One is at the level of the country, our economy. We want to be number 3. 2, I think, will be too long to think about. We want to increase our GDP 12% or so nominal. so that the standard of living of the people is improved. People should come out of the poverty. So government is providing a platform, but you have to spend money. You have to purchase land, construct building, acquire machinery, plant, do your research. Where from the money will come? Government job will end up to a point. It can provide you infrastructure, it can provide you ease of doing business, that's all. Tax incentive or PLI scheme, etc. Then industry is there to start operations. Maybe it is manufacturing, maybe it is service sector, maybe in agriculture you can go with the commercial production with the latest technology using drones, etc. we can talk about. So these are the things. So here comes the first question as to where from I get the money, where from I get the capital. There are two ways, as you all are aware, all colleagues of commerce. It can be from capital in the form of equity, or it can be in the form of debt. Debt either you take as by a loan from bank or financial institutions, or you can issue corporate bonds. So once we talk about raising of the money from public directly, here comes the role of financial market. So financial market is a platform which connect the saver, the investor to the industry, which is requiring the capital for the purpose of doing business, establishing an organization, factory, or whatever. In case you want to borrow money in the form of bonds, loans, then you have to go debt market. So first thing is, even though you all must be very clear about it, the share capital is to be raised from capital market, share market. First time when you raise the issue, you all know that is a IPO, initial public offering. If you are raising it again, it is called follow public offer, FPO. So whether it is primary, whether it is secondary, it is the money taken from the public at large. So this provides a platform for making the development in the economy, which is required because without money, nothing will happen. So it is the stock market, the capital market, which provide you risk capital. I'm adding the word risk capital. Because whatever money you invest in the shares of a company, that is subject to risk. These are all limited liability companies. Liability is limited. So whatever money you have paid by subscribing to the shares, that is subject to risk. But that is the maximum risk you may have. But risk comes with the gain. Higher the risk, higher the gain. We will talk about this also. Now, in case you are not interested to take the risk or lesser risk, then you provide deposits, you subscribe to bonds issued by these corporates. This is the capital market, debt market. Money of the saver, you people, me, the persons of this country or outside also, may as an investor invest in the shares, in the share capital. Or if I don't want to expose myself to the risk much, I can give a deposit, maybe secured or unsecured, or I can purchase bond, which provide me liquidity also. So capital market is providing a source of getting the fund, as well as it is providing a platform of liquidity. Whenever you want to sell, you can sell it. You want to sell it next day, you can. If you want to hold it for 10 years, 20 years, 30 years, your choice, you can. But whenever you want, you can. Similarly, in the case of debt market also, you can provide, sell it on the debt market. Even though debt market liquidity is not very high as of now. So SEBI is working on that. Like liquidity is there in the equity market, it should be on the debt market also. You may be happy to know India as a country, which was more in the avoid category in terms of debt, or was not provided that confidence in terms of fiscal stability, which is considered by considering the stability of the government, policies of the government, and stability thereof, level of inflation, corruption, fiscal deficit. A lot of factors, ease of doing business, a lot of factors are being considered for the purpose of giving an investment grade to a country. But recently, JP Morgan, one of the biggest investor fund and the investment company in the world, and Bloomberg, they have incorporated India and Indian debt market, actually government securities, as their investment destination. From June onwards, some funds will start coming, and they will be initially going to government securities, gilt we normally call it, and subsequently it can go to corporate India also. What shall be the effect? Bond market will also be liquid. It will also be providing you opportunity to buy and sell any bond whenever you want. Second, the corporate sector will also be having an access to raise money by issuing bonds and get foreign money. So availability of the money, the finance capital will be there, but at the same time, it will be at a lesser cost. Once it is at a lesser cost and with the dignity of stability being investment grade, then your cost of capital is less and you have more capital at low cost, you can grow. Because as of now, what is the indication? That around 75% of the production capacity of the country is already there, utilized. And it can never be 100%. So means if the country is to grow, keeps growing as is expected, then we need more capital for creating infrastructure. So that will be the situation. So I think we are clear that capital market, debt market, comprised in financial markets, it is the platform which is being provided for money from the saver as an investor, from the saver, we people as a lender. If I go to the bank, I get 7%. If I give this money to Tata, Birla, or whomsoever I want, I may get 9%, 10%. So whatever profit the bank will be taking, I may enhance my income by that amount. But definitely a degree of risk is coming. That risk I am taking, not bank. So this thing, while investing, you have to think. So Indian stock market, if you go to the history, can anybody tell me, because I think it's going one way only, when was the Indian stock market first started? Does anybody have an idea? Anybody? When was Indian stock market started first? Which stock exchange came to India first? Which year?
1857 Bombay Stock Exchange, sir.
When?
1887.
1887, great.
57, sir.
75. Fine, 1875. So, at the time, it was the Native Brokers Association. So, India, why it was so? If you link, India was an underdeveloped economy, was poor country, but still it had the first stock exchange in 1875. Because earlier India was really developed economy and all those things were happening. Even trade in commodities were taking place through stock exchanges. Now it is formalized in 1985. It was taken as a Bombay Stock Exchange. It was corporatized. In 92, National Stock Exchange came, because earlier everything was paper based. The buying and selling was in a room, and there used to be all sort of a you can say auction. You are selling, giving the price, somebody is buying, all sorts of things. NSC came, it came with a digitization, online trading platform, no physical movement. Then came the dematerialization of the share certificate. Shares were dematerialized, demat. Earlier, it used to take 15 days in carrying out a transaction of purchase or sale. Now, I think it's T+1 next day, or maximum T+2. Today transaction, tomorrow delivery and payment. From March, after March, they are planning T+0 or T+1. Today itself, you will get your money, you will get your share, or maximum tomorrow you will get it, depending upon categorization, whatever they do. So this has provided a platform to the people for easy access. Plus, one more important thing has happened. Earlier, stock market, investment in the stocks, it was taken very bad. Talking of stock was a taboo. If you look at the old Indian movies, you will see people who are getting financially destroyed by investing in the stock market. It was taken as a satta market, a speculation market, gambling. It is not so anymore. People are getting educated. National Stock Exchange is also coming out with a lot of education program. They give an ad, सोच कर, समझ कर, invest कर, think, understand, and then invest. So, after 20, Corona, a lot of people came to stock market because people were sitting at home. Banking was digitized. Stock exchange were, by the way, fortunately already digitized. So while sitting at home, people started investing. And now due to this technology, IT, information technology, lot of material is available on YouTubes and websites. You can learn, which was not there at all earlier. Earlier, physical annual report used to come, and that physical annual report will reach you. You read, understand. Will take months. Now, immediately you get everything about the company. You visit any website, all the information will be there. So it has made it convenient. Plus, our economy is growing. And if you want to become a partner in the growth, I think you should think of investing. I'm not inducing you. You all are learned people. You all understand the financial statement, financial structure of the company. You can analyze the company and see where our economy is going. Because if you have money and your money is saved, what options are available to you? Fixed deposit, interest rate is 5-6%, 7%. Inflation rate is around 5%. 30% tax goes. What you net get is something less than 5%. So actually, you're not earning anything. You are just maintaining your purchasing power, you're maintaining your money. Nothing is being earned. So in this case, if the economy grow, company grow, profitability of the company grow, then definitely the price of the share will grow, your capital will grow, your wealth will grow, and you will take advantage of the growth of that. You take the example of Infosys. I may take some examples, but please take it. I'm not recommending any share. I'm just giving examples. If you want to invest, not to invest, please do study. Because what is relevant at a point of time may not be relevant in the future. World is changing very fast, and in the stock market, things change very fast, faster than that. For example, is Infosys. There was a time of information technology. You will be, maybe how many of you know that the IPO of Infosys, did it, how many times it was subscribed, if somebody knows? Nowadays we see IPOs are being subscribed nowadays 5 times, 10 times, 20 times, 30 times. And you're getting a premium of 200%, 300%. How many times Infosys, which is one of the biggest wealth creator in this country, was subscribed? Anybody having an idea? In year 1985? Anybody? No.
Nearly
It was not. Yes. Was it? Anybody wants to say something?
nearly 300 times it was generated.
300 times. The IPO was subscribed. How many times? It was not fully subscribed. It devolved. And the Inam Security, which was managing, purchase and subscribe and write all the shares. And now you see how much wealth Infosys has created. So what point I'm trying to make? Don't go by what was happening earlier. What is changing very fast. So we should also change along with the time. Otherwise, we cannot take benefit of all these things. The people who would think it is something new, information technology, it is going to change the world. Who thought yes, something new is coming, and computer was already there in those times. Who could think about it? They purchased, they kept the shares. And 10,000 rupees, as it is said in the state, became 1 crore or so. Many companies like this. What I'm saying, investment should be done with a proper understanding. What is the stage of economy? What is the state of this particular industry, of this particular company? Where we are planning to go, where we are today. So these are the things we should consider. That's why I'm giving an example of Infosys. It was not fully subscribed. It evolved. But now it is one of the most respected corporate house of India. But now people are getting over enthusiastic. Any public issue is subscribed many times, irrespective of the valuation. So it is hype, euphoria. People think when it lists, there will be a good gain. So they go there. So please understand, what are the credentials of the management? What is their background? Are they capable people? Are they people of integrity? Honest? Then only think of investing in that particular company. Then look at the financials of the company, the industry in which it is. What is that growth trajectory of that industry and of that particular company? And growth should not be only in terms of numbers, turnover, sales. Growth should also be with the profitability increase. If you see those things, then only you should consider investing. But I can assure you, if you do your homework properly, with conviction and understanding, and look at the movement in the economy, in the industry, in the market, then it can create a good amount of wealth for you, beating your bank interest rate much more. But please always be aware. It is a risk area you are entering into. You must be with your safeguard. You must be with safety. If you understand what you're buying, why you're buying, then I think it's fine. You can sit with this. Decide, buy right, sit tight. So we'll come back to stock market again. Let's go through investments. What are the options available for investment? First is the real estate. I think every one of you must be invested in the real estate or must be intending to invest in the real estate. Real estate definitely is the real. Whatever happens, it will remain. And whatever you require for your need, definitely you must own, irrespective of your financials, in my personal view. But it has got its own problems also. Liquidity is a big problem in real estate. Now, real estate in India has appreciated a lot in the last so many years. I don't know how much it will be appreciating. Definitely it will appreciate. So there will be long durations. And taking care of the real estate, verifying the title, rights of the person, wrong property should not be sold to you, no legal issue should be there. So these are issues in the real estate. Even though it's a good avenue of investment, and every avenue of investment, if it is worth, should be looked into what proportion. That is also a way you should consider. Now, if you have real estate to an extent, you can invest and your needs are fulfilled. You have an office, you have a home, you have some other property. Extra you want to You're all in Andhra Pradesh. You want to invest in Bangalore. You want to invest in Karnataka. You want to invest in Delhi. You want to invest in Jaipur, Rajasthan, maybe Himachal. Is there any way while sitting in Andhra, you can invest in these properties? Is anyone there? You have got 5 lakhs rupees, 10 lakhs rupees, 50 lakhs rupees, whatever. You like property in Bangalore, you like property in Himachal, you like property in Tamil Nadu, Delhi, wherever. Can you invest with that 50 lakh, 1 crore, 25 lakhs? Is there any other vehicle through which you can do that? Getting exposure to the property all over different places. Anybody having an idea? I think there must be some persons here who must be dealing with the investment. Somebody dealing with the investments or financial management. Somebody there? No. Okay, fine. Now there is a product called REITs. REITs. Real Estate Investment Trust. REITs. Real Estate Investment Trust. So what happens? There is a company called, for example, MSC in Bangalore. It is having property all over. There is a company called DLF, for example. They are having real estate at different places, and they need money to. They want to develop property. They want to give on rent. They want to take advantage of the appreciation. So instead of borrowing money and paying you interest, there is a structure. There is a product that they take money from you, and that money under that trust is utilized for development and maintenance of those properties. Those properties will be earning rental income, and after appreciation, they will be sold also. So during the duration, you get the rental income. After maturity, they may sell them and give you money back. So this way, without directly owning the property, somebody speaking. Somebody also say something. I'm getting a pop-up. So in this case, without going to these places, without getting into the selection of property, purchase of property, documentation in your name, finding a tenant, then selling it, nothing you need to do. You own a property, a share in the property, a variety of properties, number of properties in this product of REITs. How many of you heard about it earlier? How many of you, can anybody tell me who has heard about it? REITs, REITs. Surely not. You getting noise? Nobody else. So, has heard about it. That's good. It is something new. You may look into. If you want to invest in the real estate, but directly don't want to involve yourself, or you don't have sufficient money to purchase property in different places. One money like share capital you give to the company. Company have the plant factories all over the world. Similarly, you buy some units of these REITs, you will have real estate. So real estate itself is having an issue, but those issues are being handed over to some trust who will manage it for you. And this is all semi-regulated. Then next comes gold precious metal. I think all must be investing in gold. And it is said 40% of the gold of India is in the South India. In South, there is more love for gold. So, gold as such is not a productive asset. Gold is a precious metal. It is having some application in the industry, but not much. It's more as a currency. It is an international currency. You go everywhere in the world, gold can be used as an asset class. Irrespective of the region in which you go to USA, you go to South Africa, wherever you go, gold can be used as a asset. But gold provides protection in terms of inflation. If you look at the history of the gold, it provides us protection from inflation. And this is the asset. When the economy is not doing well, economy is in the doldrum, is in problems, war is there, some disease is there, some pandemic is there. It is the gold which will be going up first because the liquid, most liquid and most wanted. And in the corona also, you see gold from 30,000, 34,000 went to 65,000. Where there was a scare in the whole world. And they were all moving towards safety. And gold is provided as safety. The people buy gold for safety and all this. So, gold is an asset for safety. Another one is silver. Do you invest in silver? I think people may be investing in gold, not in silver. Silver may be precious metal. We call it semi-precious metal, you can say. It is precious. But it is more an industrial commodity. If you look at the price of movement of silver, when the economy grows, manufacturing facility grow, activity grow, the price of silver grow, demand of silver grow, and in these electronic items, some of the medicines also is a different issue. Electronic items, silver is used. So with the increase in the level of production, manufacturing, more silver will be required, and the price of silver is going up. It is said is 75,000 rupees per kg, kilogram. But it is said it may double from here in few years. This is something, what is the commentary? Because it is linked with the economy of the world is going up, consumption of gold will be increased. The next item we can talk about is cryptocurrency. Has anybody invested in the cryptocurrency? I'm not getting any response. It should not be happening. I'm just speaking to myself. Anybody? How many of you have learned about cryptocurrency? Somebody knows what is cryptocurrency? Somebody? No response. We are teachers. Maybe knowing something. Crypto. Nobody? Anyway, your choice. Now, cryptocurrency even though it is termed as a currency, it is not a currency in the real sense, because any currency is a legal tender. And it is not a legal tender because it is not sanctioned by any government. Cannot be used as a legal tender. Cannot be used as a legal tender. No government is having standing behind this. If you look at the rupee, the governor of Reserve Bank will write, I owe you or agree to pay you so much. A ministry secretary, finance. So there is a debt instrument issued by the government or RBI. But in the case of cryptocurrency, no government is involved at all. So it cannot be called. What is crypto? Crypto is actually a particular word, particular numerical, alphabetic, unique code. It is mind. Mind means you have to just do all the permutation, combination, and see what the unique code can be generated by using a lot of electricity and water, because it gets the computer very hot. And it is having a big amount of cost also in generating a unique number. And that number, what you call it, token also, that is called crypto. Crypto is, I call it cryptic. That's a different issue, but it is from cyber. It is having another name of cyber. So it is a IT. From all the software, number is generated, it is given the cryptocurrency. Somebody has mined it, produced it, got it, they are selling it. People are buying it. Now people call it asset, crypto assets. It is not an asset also in my view. People have different views. They say, what is the value of gold? Gold is worth nothing. Their perception, definitely everybody is free to pursue, to perceive, because investment is a matter of perception. You're liking, disliking, individual choice. For crypto, I feel it's totally speculative. Nothing worth. I simply feel asset means something which has got the economic value. If something can be delivered to me, something can be earned by me. Land I can rent out. Property I can rent out, I can get interest for this rent. Money I can let out, I get interest. Share I may get dividend and capital gain. But here nothing. No economic utility. No physical utility. No income. Somebody is buying, somebody is selling in some expectation. I am not able to understand. In India, Reserve Bank of India banned cryptocurrency transactions because they were taking it. It's all speculation. People may burn their finger. Like at a time there was in lotteries, a lot of people were destroyed financially in that. So it's better not to allow the people to do so. But when people went to Supreme Court, court said, is the freedom of trade. It is not something illegal. It is not causing any harm to the people. Liquor may not be good for health, but it is allowed to be sold with a warning. It is injurious to health. Cigarette also injurious to health. So government cannot ban it, but Reserve Bank of India did so. And then Supreme Court allowed those transactions to take place. Now, internationally also, this cryptocurrency is recognized by many countries. Cryptocurrency has gone to $62,000. Bitcoin, more particularly, Ethereum, Bitcoin, these are two main, there are a lot more, some are finished. When Elon Musk made a statement that I will accept payment in Bitcoin, I'll invest $1 billion in Bitcoin. Bitcoin went up. And that was the highest. After that, it started coming down. US has allowed, UK has allowed, some more countries, Australia, etc., have also allowed. But you want to deal at your risk. Government of India does not encourage, even though there is a discussion in G20 that the whole financial world should take a call on this. They should all take a similar policy how to deal with Bitcoin, because it is a very dangerous item. If you allow the transactions in the world through Bitcoin, then government will not be able to regulate it. Money is transferred from one person to another for what purpose? Illegal purposes. Maybe for terrorism purposes also. Drug money will also be transferred by this. So it may be causing many more bad things. The government is not supporting it, but government legally could not ban it. So they impose 30% tax rate on the income from any virtual asset. Maybe it is crypto. Paintings also, they are also coming in the form of digital. So they also called it virtual assets. So they are charged straight 30%. So crypto, I think is cryptic, but it comes from cyber. What comes from there? So personally, I think it's not an investment, but it's your choice. It is increasing. People are loving it, buying it. Your choice. Now, last item I'll come to stock market investing. How much time will be here with us? It's a perfect time, I think. A lot of time, I think a lot of time is still there. So, what time? Let me check. What time it is to end? 1:15. Okay, fine. Okay. So, stock market. Now, I'm talking a lot about stock market. And I think that should be the main area of discussion. Nowadays, looking at the economy, the government, the involvement of the people at large in the development of the stock market, contribution in the capital market, growth in the industry. Best way appears to be to invest in the economy. If economy is growing, you should also grow with the economy. Your financials should also grow with the economy. Your money should also grow with the economy. Your wealth also should grow with the economy. So you can directly or indirectly invest in stock market. Now, which share to invest in? I will give you some ideas. See what is being grown, where the government is spending money, where the industry is spending money, which industries are being established. Now, government is spending in railways. A lot of money, shares have moved number of times in the railways in last 1.5 years, 3 times, 4 times, 5 times, 6 times, whatever. That may not be an area immediately to get quite good returns, but it will be good. I hope the order book is quite big. Infrastructure, whatever companies, they are creating infrastructure again, they are getting the contract for road construction. You can invest in those companies which are good fundamentally, financially, debt equity ratio is comfortable, quality management, as I said earlier, also is quite good. You can invest there. They can be company Nodal Construction. They can be company like Lawson Tubro, IRB, Infra, lot of companies. They may be there. If you find them good, you can invest through them. There can be what is going on. Now, innovation is going on, digitization is going on. The companies which are in the digitization, because digitization process in India has started just now, last few years. The banking transactions are all through digital, online banking. Income tax returns are also filed digital. GST returns are also filed through electronic mode. Even income tax hearings are also nowadays happening through online mode, virtual hearing. And there is also a new thing of keeping India's data in India. You may be aware there was a controversy earlier that data of India is being stored in Hong Kong, maybe in USA, or these Google, Yahoo, whatever company mail or data we keep, where it is stored. After there is some supercomputer where it is being stored. They were not located in India. And there was also an issue about the safety of the data. How much safe it will be. So India is insisting our data should be stored in India itself. And this has come as a big business opportunity also. Some companies in India, they are developing digital warehouse, data warehouse. So you will be needing real estate infrastructure. You will also be needing all equipments, IT related, digital assets. So those companies, maybe it is DLF, maybe it is Antraj, many more companies. You can just Google, you'll find. So once they develop that, like BPOs were there at a time, they were for people to work. Now they will be digital warehouses. So they may get rental, they may get property appreciation. So that is also good business to be in. Next would be government is talking about alternative source of energy. We want to move away from petrol, diesel. We are going towards hydrogen, CNG, PNG, solar, wind power. Look at the companies in that. Which companies are working in that? Tata Power, for example, NTPC, for example. There are some companies, Adani Power, Adani Energy. These are all names, for example. Not again repeating, not advising you to invest in any one of them. Just references I'm making. And no interest. Personal. I may be holding some of them, but for reference only. So there is something new which is coming. So we should invest there. So these are the sectors plus research. Government is spending money. Some companies are doing research. You can find some companies which are doing research in pharma, research in digital world, in the innovation of products. They're carrying research activity on. Now new range is coming. We have got broadband. We have a wire through our home. But you must be aware, now there is satellite broadband also. Are you hearing about it? No need of a cable in your home connected to your computer. It is directly connected with the satellite. You will get it from satellite. So that will be connected to satellite. So that is something whatever companies are coming into. Starlink, Elon Musk, Geo, Bharti, they're all coming in that. So you can see those. I think our time will be up to 1:15 or so. So I'll just move towards some more things. What are the philosophies of investment? It is said, always remain with the sunrise industry, which is rising, which is improving, going up. Exit the industry which is coming down. You may be remembering the Kodak reel we used to use in our cameras. Kodak is no more visible the moment digital camera came. No reel was required, so Kodak company has finished. It could not keep itself updated. So something which is phasing out, get out of that company. Something which is coming, get into the companies of drone for delivery of medicine, drone for spray of fertilizer in the farms, drone for weather conditions, drone for many commercial purposes. Delivery of goods, medicine, photography, a lot of things. Drone is being used. Industrial use in the marriage also see a lot of photography done through drones. And for security purposes also, police, army, they also keep a watch. What's happening? But drone is also new industry. Ratan India Enterprise, I think, is in the south. They are in that. Many more of Dronacharya, something of the sort, companies, they are in that. So whatever company they are coming in those new sunrise industries, you should invest in them. But definitely, management should be good, financial should be good, they should be stable. It should be having a future of growth. Then I think I should bring towards the end. If you look at Zomato, a lot of is being heard in Zomato. Now we don't go to the restaurant for eating food. Food is coming through Zomato at home. Taxi we don't call, we call Uber, Ola. So these are all digital platforms, new way of business. So in Zomato, share price IPO came years back at a good price. Because at that time hype was there, everybody was running after digital. So please don't run after everything when there's a euphoria in the market. Everybody is talking very good about something. My personal advice, stay away. Look at the things with calm. Don't sway away with the euphoria. The Zomato, same Zomato 200 rupee came to 44 rupees. Now, from losses, it is coming to profits. Now it has again went to this. That is the time when it's starting to coming to profits. The price is fine. Business environment is good. It is going to make money, not going to lose money any further. That's the right time to get into that sort of a company. Now, Domino's Pizza, everybody was running after Domino's. Price was going high. Jubilant Food Works, that's the name of the company. Now the people, after having pizza and now people becoming health conscious, I think the consumption of pizza has reduced. People are not ordering much of the pizzas. So they are not profitable anymore. Share price is also coming down. So I think if you feel so, they may not be in that growing environment anymore. One may think about being there or not. So these are the things I just wanted to talk. Now in the last, how much time I got?
Sir, please conclude. Actually, 1:15 to 2 actual lunch break. Again, there is a session on 2 o'clock.
Okay, so I think within 5-7 minutes, I should wind up. Okay. So in conclusion, I want to say, as we are talking about stock market, if you look at the legendaries in the stock market, first is Warren Buffett. His theme and the philosophy is there should be value investing. So whenever you invest anywhere, you must ensure it is having a value and value at a discount. If you find, you must have done this previous lecture of security analysis. I was thinking you and tried to join also, but somehow they must have done evaluation. How to do evaluation? It is actually DCF, cash flow statement. What is the cash flow of the future in the present? That is valuation. So whatever value, if you are getting at a discount, then only you buy it. Not at a premium, not in the euphoria, only in the negative sentiment. You'll be getting something. If you're going for a long term, it doesn't make a difference. If today euphoria, tomorrow there's a dull and lull. By that period, if the industry is good, it is going to do good in the future. So market keeps coming down and up. But business, if it is good, remain invested. Second is the JP Morgan. He is believing in diversification. Don't invest the whole money in one asset itself. You may buy gold, you may buy real estate, you may buy infrastructure also through InvITs. Infrastructure investment like REITs, I have told you for the real estate. If you want to buy a toll road, you want to become a partner in the toll road. You need not be a builder, contractor. You may buy through these REIT and InvITs, INVITs. And lastly, Munger is also a legendary investor who has died recently at the age of 99 years, who was the guru of Warren Buffett, who is one of the richest person in the world and made his wealth through stock market only. He says there should be a moat of a company. Moat means pricing power. Your product should be unique. Product should be good. Like iPhone, I gave the example. So they get price. Nobody will ask the discount for the iPhone. You go to over a hotel in Udaipur, EIH hotels, East India Hotel, whatever price they quote, you can't say, I'll not give 20,000, I'll give only 8,000. This is okay, no, nothing. That pricing power, whatever companies can command pricing power, where you cannot bargain. That product is such a value, that brand is of such a value. Like Rado watch, wristwatch you buy, they say 2 lakh is the price, so 2 lakh is the price, no discount. So this is the concepts you should keep in mind. Don't be swayed away, don't come in momentum. Be cool, be cautious, look at the fundamentals, look at the management quality, look at the long term. That's all I would like to say. Thank you very much. Thanks.
So thank you so much, Professor Sharma ji. Wonderful session. It's I can say it's a marathon session for us. Now I request Ankarao Garu, please respond. Ankarao Garu.
Sir, have any?
Ankarao sir. Yeah, tell me.
Okay, వినపడుతుంది కదా?
వినపడుతుంది సార్, రెస్పాండ్ అవ్వండి. రెస్పాండ్ అవ్వండి సార్.
Sure. See, good afternoon to all. I am Ankarao from NRC Vijayawada. It's my privilege to give vote of thanks for this session. After listening this session, the opinion of all the participants from our NRC is the greatness of our resource person is he has everything on his fingertips. He touched every point without the help of PowerPoints. From this, we can understand his mastery over the topic. He clearly explained each and everything about economic growth rates of various countries, role of research and innovations in the development of economy, and the government support and expenditure on research and development, how the corporates will get capital in the form of equity and debt, and various latest updates regarding stock markets, including cryptocurrencies. So thank you very much, sir, for your wonderful explanation. Thank you very much.
Thank you. Thank you all.
Sharmaji, thank you. Thank you so much for accepting our invitation. We will be in touch with you.
Thank you.
In
Thank
coming
you.
days, we'll have an offline sessions with you. Thank you, sir. Thank you so much. Thank you.
Okay, thank you. Welcome. Always. Thank you.
స్పీకర్స్ అవసరం కదా.
Sir, good afternoon, sir. Am I audible, sir? Srinivas, sir.
అమ్మా గుడ్ ఆఫ్టర్నూన్ అమ్మా.
Sir, నేను సార్ నిఖిల వినిపిస్తుంది కదా సార్? టుడే
నువ్వు
ఇట్స్ ఫైన్.
కనపడలేదు కానీ వాయిస్ వినపడుతుందమ్మా.
సార్ కనిపిస్తాను. ఇక్కడ కనిపిస్తుంది. ఇప్పుడు ప్రెజెంట్ చేయాలి సార్.
ఓకే కనపడుతున్నావు.
ఓకే సార్, ఓకే సార్.
ఇట్స్ ఓకే. మ్యామ్ని 2:10కి రమ్మన్నాను, ఎందుకంటే మళ్ళీ మన వాళ్ళు జాయిన్ అవ్వట్లేదు. Here all NRCs. Now we have only one online session. After that, only offline session. I request you all NRC KRPs. You are requested to prepare your offline session document. Those who are already taken the class, they are required to prepare offline session document. I will prepare all our online sessions. I think, am I clear for you? అన్ని ఆన్లైన్ సెషన్ సంబంధించి డాక్యుమెంట్ నేను ప్రిపేర్ చేస్తా. ఆఫ్లైన్ సెషన్ సంబంధించి ఎవరు ఏ క్లాస్ తీసుకున్నారో ఆ క్లాస్ సంబంధించిన ఆఫ్లైన్ సెషన్ డాక్యుమెంట్ రెడీ చేసుకోండి. కంపైల్ చేసి రిపోర్ట్ మనం పంపించేస్తాం సిసికి. మన వాయిస్ వినబడిందా? ఎవరు రెస్పాండ్ అవ్వలేదు? రాజమండ్రి ఎన్ఆర్సీలో ఎవరున్నారు
బాబు? ఇంకా ఇంకా భోజనం చేసి జనం రారా, ఇప్పుడే వస్తున్నాం.
ఏం పర్లేదు, మెసేజ్ క్యారీ చేస్తే చాలు. ఓకే, ఎవరు మాట్లాడుతున్నారు రాజమండ్రి నుంచి? హలో,
శిరీష సార్. హలో సార్, శిరీష.
మాట్లాడండి. ఉన్నిలే పర్లేదు. ఓకే
సార్, వినిపిస్తుంది సార్ మా వాయిస్?
శిరీష్ గారు,
సార్.
ఓకే వినపడుతుంది. కాదు, ఆఫ్లైన్ సెషన్స్ ఎవరు డాక్యుమెంట్లు తయారు చేసి పెట్టాలి మేడం. ఆన్లైన్ సెషన్ మొత్తం నేను కంపైల్ చేస్తాను. మండే కల్లా మొత్తం కంపైల్ చేసి మనం షేర్ చేసేయాలన్నమాట. అది ఇన్ఫార్మ్ చేయండి. ఐ థింక్ మీరు ప్రతిమ గారు ఇద్దరు కదా ఉన్నారు అక్కడ?
సార్.
ఓకే ఓకే, మీ సెషన్ మీరు, ఆవిడ సెషన్ ఆవిడ, మొత్తం డాక్యుమెంట్ తయారు చేస్తే మీ సెంటర్ నుంచి సరిపోతుంది. ఆన్లైన్ అక్కర్లేదు. థ్యాంక్ యూ.
ఓకే సార్, థ్యాంక్ యూ సార్. మీ వాయిస్ కొంచెం స్లోగా వస్తుంది సార్.
వస్తుంది, నెట్ ఒకటి ప్రాబ్లం ఉంది, ఇచ్చేస్తున్నాం. సడన్ గా పవర్ పోయింది, వేరే ఆల్టర్నేట్ చేసాం. ఓకే మేడం. Hello. హలో రాజమండ్రి వినపడుతుందండి నా వాయిస్ హలో
స్లోగానే ఉంది సార్ ఇంకా
వస్తుందండి
సార్ మీ వాయిస్ క్లారిటీగానే ఉంది.
ఓకే ఫైన్ ఓకే మేడం థ్యాంక్ యూ మా అఖిల గారు ఇన్ ఆన్లైన్
సార్ మేము రెడీగా ఉన్నాం సార్.
ఓకే
మేడం జాయిన్ అయితే స్టార్ట్ చేస్తాను సార్.
ఆల్రెడీ ఫోన్ చేశాం నాకు కాల్ చేస్తాం ప్రాబ్లమ్ సాల్వ్ చిల్లు మనోళ్ళు ఇంకా రాలేదని చూడడానికి రమ్మని నాకు మాట నేనే ఇంకా ఫోన్ చేస్తే సెటప్ తీసిన తర్వాత ఎలా ఉండదు కనిపిస్తుంది
Maybe it's connected. It's connected. Yeah. So when do I start? Took some time. Oh, sure.
One, sir. Madam, good afternoon.
Set your audio. Please set your audio.
Yeah, can I share my PPT?
Yeah, you can share, ma'am. Share screen.
How it's not coming because I have joined as a guest.
Okay.
And the guest also we can join. We have given the permission to all. Share screen is there, no? One tap. Share is there. Stop video. Share is there. One arrow mark is there.
Yeah, I'm just trying to find out. Normally it's there. I cannot see it.
So by the time, may I brief the session for Madam, sir?
Yeah, sure.
Yes. Very good afternoon, Madam.
Good afternoon.
So, dear lecturers, now we have Dr. Madhu Vij Garu for this session on experiential learning. Dr. Madhu Vij is a former senior professor of finance with over 4 decades of experience at the Faculty of Management Studies, University of Delhi. Her professional and teaching interests include the areas of international finance, risk management, banking and financial services, corporate finance, and accounting. Professor Vij served as a government nominee at the Institute of Company Secretaries of India from 19 to 23 and is an independent director for 3 private companies. She has been a non-executive independent director of MOIL Limited, a mini Ratna PSU. She is a member board of governors of Arun Jaitley National Institute of Financial Management, Lal Bahadur Shastri Institute of Financial Management, member academic advisory body of few management institutions. She was also the coordinator of Syllabus Revision Committee for Management Paper, UPSC New Delhi of 2021. Professor Vij is actively involved in research, consultancy, and training for several leading public and private organizations in the areas of risk management, project management, strategic financial management, case-based methods of learning and teaching finance for non-finance managers. She has completed a number of projects sanctioned by national bodies like UGC, RBI, ICSSR, SAIL, and Delhi University. Dr. Vij has extensively published research papers in international and national journals of reputed and has presented papers globally in the field of banking and finance. Professor Vij had been the director of Women's Studies and Development Center, University of Delhi for 1 year and is actively involved in working on gender issues and has delivered special talks in this area and has also worked on a project on microfinance and gender. That was a very great and interesting intro of your ma'am. We are privileged to have you for this session. At Delhi, we had a very great session of yours. I hope everyone will have a great session now. Thank you.
Okay, thank you. Srinivasi, I cannot show my PPT. It says share, but it is in a PDF form.
Okay. Then in PDF also you can share entire screen. It is visible now.
No, I cannot get the shared screen. It is only shared PDF. Can I mail it to you instead? Let me see. Okay, I think I'm getting it now.
In the meanwhile, you try.
Can you see my screen now?
Only you are visible. That's it.
Okay, why it is not? Sometimes just
Yes, ma'am.
Can you see the screen?
Yes, ma'am. Yes, ma'am.
Okay, you can see the screen now, na?
It's learning. It's okay. You do one thing, ma'am. Keep it in presentation mode.
Okay, okay.
Yes, ma'am. That's it.
That's fine. Yeah. Is that okay now?
Excellent, ma'am. Excellent.
Okay, okay. So, thank you for inviting me. It's always lovely interacting with all of you. You all are known teachers in your area, and as I always say, it's great to connect virtually, or online, depending on the kind of mode that is available. And I do also remember in JNU, we had a lovely interaction, and we do look forward to a kind of, the same kind of interaction with our participants. And my request to all of you would be, you can always, stop the discussion, and we are all colleagues. So we could be, doing our interaction rather than a one-way traffic, wherein I speak and you listen. Okay. So let's start off with this very important area of experiential learning. A lot of times we say, what is experiential learning? And I'm sure each one of us understands the term experiential learning. But the national education policy and the way we have been looking at it has given us a little different perspective. So, how we could use it in our daily lectures, how we could adapt it to our learning is probably what we could, I would say, at the end of the day, have a takeaway in terms of our interaction today. Now, in simple terms, experiential learning is learning by doing. And what is learning by doing? No, I need to learn swimming. So I need to get into the pool. Or I need to learn driving, need to be behind the wheels. Or let's say, suppose I want to show my children what are the various animals. What would I do? I'll take a book, show them the pictures, but at the same time, I'll take them to the zoo. Now, the point what I'm just trying to help all of us understand here is experiential learning, the way we have been looking at, is deep learning rather than surface learning, So it's a lot more than learning by simply doing. So we are going to talk about deep learning, wherein we get into the details of a project which I'm doing or any other assignment which I have. And, what one would understand by this whole phenomena of deep learning would be that I use a number of different methods to learn the same. What could be the other alternatives? I could be reading, experimenting, role playing, and discussing with my colleagues. How does it benefit? It helps both we as faculty and the students, who are our ultimate stakeholders, to truly understand what they are learning by applying and discussing these theories rather than just memorizing them. I think that is another focus which I would want in today's lecture. A lot of times we say, my lecture should have a 3-2-1 plan. What is that 3-2-1 plan? 3 could be in terms of the knowledge which my students have gained today. 2 could be in terms of what I have shared with them today. But that 1, which is the most important, is a takeaway. So every class, if it has at least 1 takeaway, I think we are sorted out as faculty. So what is that 1 takeaway which we are trying to, tell our students? It is, don't memorize, but learn from experience. And a lot of this comes by sharing experiences amongst each other. I would not say that experiential learning we have only learned in the last 2 or 3 or 4 years. Not really. Whether it's commerce or whether it's management, whether it's finance, whether it's OB, whether it's HR, whether it's marketing, in all the papers, the best way is to learn by actually putting a real kind of a scenario, a situation in front of us. And these are different situations which I would also try and do with you. Now then comes, okay, these are reflections. But what is my role as a teacher? My role as a teacher, or I would say our role as a teacher, would be to develop the competencies by thinking of a real life kind of a scenario for every situation I put in front of them. You know, so if I'm talking of, let's say, accounting, I'm talking of financial statements. I show them the financial statements. I see these are the important areas. If I'm talking of an HR, I talk about a real life problem, could be the Maruti problem. So what I'm just trying to say is, or let's say in production, absolutely n number of issues of supply chain, you know, all the time. So whether it's an Amazon, it's a Flipkart, we all the time hear of a lot of supply chain issues there. Now, that is another important area which I would like to identify. And that is the application of knowledge and skills in the real world to enhance the learnings of our young scholars. Okay. Now, as commerce and as management students, what is the one important goal which all of us have? It is to develop leaders for tomorrow. And let me tell you, during the global financial crisis, this is exactly where we failed. And I'm not saying more in India, but you know, one used to read a lot of literature on the global financial crisis and why our students were not employable. And you know, the best of these schools could be a Wharton or otherwise. All of themselves said, we have not developed the right skills in our students. And some of these skills were, you know, like simulation or adapting to a real world scenario. Okay. Now, what is the role of a teacher in experiential learning? The role of a teacher, which I just focused a little more, was on helping them think beyond the classroom. And let me give you 2 or 3 add-on initiatives in this case. You know, think beyond the classroom, great. But beyond the classroom in terms of some critical thinking exercises. And in today's context, it has to be, let me put it as, has to be in terms of industry collaboration and networking. No more networking is a bad word. No, not really. Networking is a good word if I take it to its logical conclusion and I understand that, you know, the word is, you know, helping me understand the different nuances of the skills here. Now, if I were to ask you, do you think experiential learning is also about overcoming the challenges? Definitely yes. And in what context do I say overcoming the challenges? You know what we need to do with our students? We have to ensure that they expand their horizons beyond the classroom. So the real experiential learning, and I'll not use the word experiential learning, you know, after this, I mean, a little less, because experiential learning, we have always been using in different phrases in our interaction. So the understanding which happens beyond the classroom walls is what we are in trying to understand and trying to ensure that it gets across it passes on to our students. So the question always is, how do we implement experiential learning? Fortunately, in our discipline, both commerce, management, and a lot of related disciplines, whether I'm teaching a BBA or I'm teaching a BCom or I'm teaching honors or I'm teaching an MBA or any of the specialized disciplines, we have provisions for a lot of internships. We have provisions for a lot of real world projects. We have provisions for simulations and the kind of interaction I would always have with my students is something which will help the how do I put it, the theories which I have learned into practicalities of the real business situation. The issue these days is that the way we say, the only thing constant is change. So the theories also change. Before we get a good hang of the theory may have changed. Before we have a good hang of the solution may have changed. So we in HR used to talk about 360 degrees evaluation. You now talk of a 720 degrees evaluation, and so on and so forth. So that is what I would, so that would be the first message I would give, that you need to take your learning beyond the classroom, and each one of us will need to adapt. Whether it is teaching through case studies or it is teaching through caselets. And in today's context, I'm not the one who propagates and say, give a case study to the student and let them solve on their own. Absolutely not. The role of a teacher would be to first explain the concepts and then go on to the various case studies. Now, we are all very fond of the national education policy, and rightly so. It has introduced a paradigm shift in the way we were looking at education. So it's not that, and that is what I started off by saying. It is not that we were not doing experiential learning earlier. We were always doing. But let me give you an example here. The whole outcome-based education, wherein even before I start off with my course, we do write what will be the outcome of this course. What will my students learn at the end of the course? Now, I think it is both a backward and a forward-looking exercise. So this is one other message I would like to give. Don't think of our teaching as only a one-way kind of an interaction. It should start both backwards. What will my students achieve at the end of the course? And that is what will help us in terms of our achievement. Now, does this mean I'm only, suppose I can give you my example here. I'm a finance professor. Quite boring a lot of times, because if somebody were to teach HR or let's say OB, there were a lot of interesting simulation exercises. Now, but that is going to be a challenge. So we have also, in some of the so-called dry subjects, which I used to hear earlier, we have tried to introduce innovations by making the whole learning fun and engaging. So if I'm teaching something like a ratio analysis, I never do ratios like this. I'll always have a real balance sheet or a simplified balance sheet so our students appreciate what is being done. And, really doesn't need to be overemphasized, this whole thing about critical thinking, teamwork, etc. So the national education policy, with its focus on outcome-based, Bloom's taxonomy, what the students will achieve at the end of the course is probably, something which is a great learning for each one of us. When you talk about this whole way in which we have conceived this concept of experiential learning. And this is exactly what I was trying to talk about just now. You know, each professor is unique. Each class is different. Now, if this is so, then the entire way in which I approach my class has to be different. Sometimes it could be, a more like a role play. Sometimes it would be a game or something like that. So what I'm just trying to say is the model may remain similar, but how you reflect on the teaching and how you, talk about the concepts is going to change. Okay. So the whole concept of experiential learning can happen through lectures, can happen through projects, can happen through reflections, can happen through case studies, can happen through a visit to a garden. It is ultimately, I would say my discretion and the way I use the concepts and I use the application, which will help us in relating what a real life scenario can do to an experiential learning format. Let me give you an example here. During the global financial crisis, we read a lot about why the crisis happened. I'm not going into that detail, but I'm picking up an important cue from the global financial crisis. A lot of our graduates were not employable. Now, this should be a good case study for us. And this is the learning I should carry in future years. This is my retrospective and prospective case analysis. Now, the question is, why were the students not employable? If you had read at that point, and again, I insist that less true for India, a lot more true for other countries. The important reason was that we had not taught our students scenario analysis. What does that mean? A lot of times when we are teaching our students, we are teaching them concepts, theories, which are more like a QED, which is what we do in mathematics, which is what our children learn, which we have also learned in school. But what we need to appreciate and understand is management and commerce is not a QED. It evolves with the kind of scenario we are talking about. So I can go to a class. Suppose I'm doing a Maruti trade union class and I'm discussing the why of trade union, were the workers right, what suggestive action should Maruti take. I cannot go with a set solution. I need to let my students think and the kind of solutions they come up with. I think that could be a great learning for any organization. In a little different context, when I read about these, a lot of articles got published, both India and abroad, about scenario analysis, and they said, our young graduates don't have that leadership skills and they can't think out of the box. What they were implying is that we are faced with a situation we have not faced for the last many years. The kind of crisis we faced was after the depression of the 30s. So if we are facing a situation which is very different, you also need to think out of the box. So what kind of solution do we propose? That is the whole focus we would like to give on the kind of experiential learning we talk about. And I would again say the way you approach the concepts, the way each professor handles his subject has to be different, has to be according to the environment in which I'm operating. Okay. Now, you talk of experiential learning. Each one of you would have written probably, or at least attempted or discussed in class, a lot of case studies. Okay. So, can I ask from you, what is a case study all about? Any maybe one or two thoughts? Any thoughts? Yes. What do you think a case study is all about? Yeah. A little louder. Yeah.
Case studies are nothing but a real-time situations maintained in a nutshell manner.
Okay, very good. Any other thought? 2 or 3 thoughts?
Experiential learning is one kind of experiential learning.
Absolutely, you're right. So experiential learning is also about case studies. What else?
Or any issue happened in the financial conditions of a company or something like that. They have to find solutions for it.
Absolutely. So, all of you are understanding what is experiential learning or case study all about. Now, all of us would have read some interesting stories. And there are some stories or some books, if we pick up the book, we'll not be able to leave the book. A lot of times, you'll find children, they get hooked up to a lot of these famous books which they read today. So, what I would like to say is a good case study or experiential learning, the way we are saying, is all about the way we read a story. And the entire exercise is a good form of storytelling. So we're not doing anything else. And remember, if it's a good story, like you go for a movie, if it's a good story, I get hooked to the movie. And that is what is experiential learning. So completely about storytelling. And when I say storytelling, what I'm implying is how we have started from the beginning to the end. Let us adapt this to what is our profession. You all write number of articles. You'll find that you will always distinguish between, in my own writing, in our own writing, some articles are very interesting, some are not. So it's how you have bound the article together, which is the best way. And exactly this is what experiential learning is all about. It necessarily doesn't mean that I pick up 10 examples and come for my class. No, the same example, what I read every day. So experiential learning, please remember, it's not only success stories. It's also about failure stories. Now, I teach a paper on enterprise risk management. And you know what is the mandate of that paper? The mandate of that paper is learning from risk failures. So we pick up a Satyam, we pick up an Enron, we pick up a Yes Bank, we pick up a Silicon Valley Bank collapse, and say, what are the learnings from these crises? Like the global financial crisis I keep mentioning. What are the learnings so that never again we face this crisis? And you've seen in the US, they have come up with the Foreign Corrupt Practices Act. They have come up with a Dodd-Frank Act. And you know what is the underlying? The underlying is we should never again face this kind of a crisis, because the kind of impact it had on the US economy, nobody else suffered so much. Now, this is exactly what I'm trying to say. It is both successful and failures to fail. Now, let me give you another example. We had the COVID. Okay. Now, during the COVID, it's a completely experiential learning. Everybody, it was a surprise for all of us. We never thought the impact could be so serious. But there was a good point to this also. The kind of online learning we are all doing, attending lectures across the globe, sharing our thoughts with participants all over without wasting time and money is what we have learned. So this is also a form of learning. But the point which I wanted to make from the COVID is some industries thrived during COVID and some industries suffered a lot. So don't you think it's a good learning for me also to help my students learn? Now, if I talk of the pharmacy sector, if I talk of education, a lot of them did not get impacted, but a lot of other sectors got impacted. Anybody of you remembers the Byju's case? There are many aspects to this, but there is one part of the Byju's case which is a good learning. Anybody remembers why Byju's is facing a lot of issues these days? Take a guess. When did Byju's really become important? That was during the COVID, when the whole online learning became so relevant. You know what the management thought? They thought online learning will continue, the digital learning will continue, and things would remain the same, which is not so. When things come back to normal, we would like to do a face-to-face interaction also. So sometimes when I'm not able to understand the market, anticipate the market, I get into these situations. Or maybe I'm going to discuss the case studies later, but a Silicon Valley bank collapse. You know what they did? They did not understand the meaning of diversification. And this is a learning for other companies. This is experiential learning also. So experiential learning doesn't mean that I teach it in my class. Organizations also have to learn a lot of experiential learning. So Silicon Valley, where the most of their funds were in startups. Now that is what is one dimension of what we are seeing. Let us come a little to case writing here and the cases we study. All cases when I discuss in the class should have some capability to be generalized. And in today's context, what do you think would be the basic of a good case study? Take a guess. How do you think you will say A is a good case study, B is not a good case study? How do you think you'll do that? I mean, you have done many cases in the class. What do you think is a good case study? Take a guess. Anyone?
If it's close to reality or relevant to the...
Absolutely right. Very good. Any other thought?
And the solution should not be very clear, sir. Be clear.
Okay.
It should not be obvious.
Okay. Good. Now, see, the point is, a good case study will help me to understand what all you are mentioning, but something which also can be generalized. Let me give you another example here. Do you understand or do you remember what they say in the National Education Policy about cross-functional thinking? You know what is the whole concept of cross-functional thinking? Cross-functional. And this, as management and commerce teachers, we need to really appreciate. What is this whole concept of cross-functional thinking is that, I need to be a little more aware of a marketing, a production, a finance, and other disciplines. Let me just give you one or two understandings of this concept. You know, the problems facing organizations today, are they unidirectional? I want to ask you this question. Do you think the problems facing organizations today are unidirectional? Yes or no? No. Absolutely right. Now, taking a cue from this, if the problems facing organizations are not unidirectional, then how can the solutions be unidirectional? So don't you think you need to know a lot of all? And that is exactly what this real life experiences or case studies tell me all about. So the experiential learning is about learning from different environments, learning a lot from different scenarios, not from one situation. So this is one important part where the focus is. And one more line on this. A good case study, which is like an experiential learning, prepares me to face the realities of the real world. Okay. So when you are writing a case study, you need to put in-depth study of a particular situation, the problem learning, and these are the two questions which I would again like to discuss with you. Do you think a case study will answer all questions completely? Do you think a good case study will answer all questions completely? Definitely not. If it answers all questions completely, it is not a good case study. It should leave some room for discussion. It should leave some room for different interpretations. And it should leave my students with various thoughts and questions. That is what is experiential learning also all about. So, in a simple terminology, it is both prospective and retrospective case study. Okay. Okay. Now, we're talking of experiential method, real life scenario. Why do we need to go in for experiential method of teaching? We can hear from you also. Why? Why can't I continue with my traditional form? I've been teaching that well. Probably a lot of us studied also with only the lecture method. So what's so good about the experiential method of teaching? Yes? Just a few quick points which you could give me. It's like a little recap of what we have done till now. Yes? Little louder. Little louder.
Madam, the student will be able to dictate what he has learned if it is through experiential mode of that of
Absolutely, yes. Absolutely, yes.
It always remain in this.
Exactly. Exactly. What else? Give me one or two quick points and I'll summarize some of them.
The other centers, please respond.
Yeah.
I request you all other centers, please respond.
Yeah. That's what helps us clear our own doubts, helps us, we have to go back to our classes and start with a different way of teaching, So why and what is the benefit? Let me do a little quick analysis and then we'll come back to your understanding once again. Let me tell you, this is...
Excuse me? Yeah.
Yeah.
Yes, ma'am. This is Dr. Navina from SR or NRC.
Okay.
Experiential learning will help the students to engage in learning, madam. We can easily engage the students.
Absolutely.
They will not, engage. In that way,
yes.
It's very useful, I think.
They'll not do their mobiles.
Yeah.
You will have completely captivated them in your teaching. See, the point is, and I always tell this to my students also, it's easy to talk but very difficult to listen. How do I ensure that each one of you is with me in the lecture? And that is the way I will do it to my students, So let me put it like this, very well said. It's the most adaptive style of teaching, And the less said, it presents actual business situation. And it feels like what it is to be in a real world. And the most important one, which is going to be the only way of teaching going forward, I'll tell you, is it facilitates interdisciplinary teaching. It facilitates interdisciplinary teaching. And the only method which helps you examine both successful and not so successful situation. I'm sure each one of you would have done many successful business scenarios in your class. But how many of us do unsuccessful business scenarios? I made it a point to do a lot of them because scenarios like a COVID, scenarios like a demonetization, even the Ranbaxy scenario or the Yes Bank scenario helps us to understand how I will go forward. Let me give you another example. When you talk of startups, and if you do a little analysis of startups, you will find for every 50 startups that have failed, there'll probably be one startup which is successful. 50 failed, one successful. And in the last many years, we hear of a lot of startups winding up or other issues. There are many issues and not necessarily the financials one. A startup which is coming up with a good idea, it is said for a startup that if I'm coming up with a new product, I need to ensure that if I'm coming out with product 1, I have to have product 2, 3, and 4 at various stages of development with me. Because as soon as product 1 comes out, there will be innovation, there will be people who will copy my product, and the Schumpeter's theory of economic development will hold good. So the excess revenues which I was getting through economic development would not be there. So what I'm trying to say is there are learnings, and again, adding on to that, there's so much focus on entrepreneurship these days. Innovations, entrepreneurship. Just give me a sorry. How do you encourage entrepreneurship? How do you encourage innovations? You encourage them by giving them small examples. You encourage them by giving real life situations. That is the only way you will go ahead. So, in a little more summing up, where do you learn swimming? Where do you learn playing cricket? Where do you learn about the animals? It's all only when I enter the field. Where do you learn how to fly? Yes. Now, if you're going to talk about, let's say, flying an aeroplane, it's going to be a very costly exercise. Or you're driving a car, I can't straight put you on the road. So there are simulation exercises there. But that's the way it works. Okay. Now, what could be the ways to encourage experiential learning? I've talked about each one of them, but I've just put it here for us to recap. It's a good recap in terms of the way it works. could be role playing, could be field excursion, group work, case studies, community service, activity based learning, or maybe games which we play. Okay. Now, this is for both. If I'm doing experiential learning, because experiential learning also means a situation analysis. Now, when you are doing any form of case study or any form of experiential learning in the class, it's good to understand who my audience is. And the way I have also adapted my lecture is that a lot of you are from different backgrounds. So who my audience is, diagnose the problem, and a case study or a good case study could be both open-ended and closed-ended. What does open-ended and closed-ended mean? Open-ended could be where I leave room for a lot of discussion. A lot of OB cases like the Maruti or a Maggie case study, they are open-ended. You can't really come up with the right solution. So I should give that benefit to my students and accept the different views they are coming with. Close-ended would definitely be, in a lot of other areas where I can decide a little, something like a case-led. Okay. Now, whenever you are taking forward a good experiential learning case study, it should generate good discussion. If it does not generate good discussion, it will not be a good case study. Now, I'm just trying to give you a little format. So if you are trying to prepare your own case study, this would be the format which you can read here. Context, strategies, develop possible solution, evaluate challenges and recommendations, which I'm sure you all are aware of. Now, what do experiential learnings do? They tell a story, they focus on the customer, they demonstrate success, because a lot of time they are based on real stories and real results. And don't you think they are inexpensive? Don't you think they are inexpensive? Now, I'm sure a lot of your students participate in case studies. And how do they participate? A company will have a real problem, like a brand equity or introducing a new product. So a lot of these are inexpensive scenarios to hit the ground running, as we say. Now, what I've done is 2 or 3 exercises for you, otherwise, because that is how we understand a good case study. I've given a small case study of Maggie. And I'll just give you, because I've tried to give case studies which you are a lot more familiar with. And suppose you were to give this in your class. Let us do a little understanding of how I will discuss this with my class. And what will be some of the issues you will flag out here. So take a minute or two and then we can discuss this case study. Yeah. There are in fact 2 of them. In fact, let me give you 5 minutes for that. One is the Maggie and the other is the Maruti factory violence. Okay. So let's very briefly understand the Maggie case study. So what can suppose I were to ask you the learnings, what would it be? Yes? I mean, I'm just trying to give you a few real life case studies so that you can immediately start practicing in the class.
I'm Dr. Pratima from NRC Rajmandri.
Yeah.
Discuss about Maggie noodles, ma'am.
Yes, exactly.
Yeah, Maggie noodles brand started in the year 1983, and trying to get a foothold on foothold.
Okay, very good.
In a very short period of time, from 2010 to 2014, it lost foothold.
Exactly.
Short time. It took a lot of time to build up, but it took very short time to gain that popularity. So
Okay.
I think here we have to learn something, isn't it? We take lots and a number of years to build up something, but
Absolutely.
the moment you become lethargic, things might go down and then you might lose your place. And that is something we need to learn. At least I have thought this is the learning that we should get from Maggie Noodles.
Very good. First learning. And if I summarize it, it's difficult to build brands, but it's very easy to lose them. You know, as you said, they built up the reputation over a period of time, but how soon they lost it. That is one. Let me add one more. Nestle is a multinational. And if you have seen this history of Nestle, they never took the Indian market seriously. This is the learning to other multinationals. When our Food Development Authority, when FSSAI, Food Safety and Standards Authority of India, raised the red flag, Maruti never took it seriously. I'm sorry, Nestle never took it seriously. They said, okay, it will die its natural death. But the Indian government was very serious and they had to withdraw the noodles from the market and come up with a revised version. Anybody else would like to add before I summarize a little more? Anyone? Okay, let me summarize this once more. This whole case study, whatever subject you are teaching, I have many times used it in finance also. It can be easily used in OB and HR, but it can be used in marketing, as we said about brand. So this is what I meant. Every situational is cross-functional. And if you read this case study is about building and maintaining trust, credibility, transparency, and taking into account my various stakeholders. So I have my customers, I have my regulator, I have my authorities, I have to take care of them. And the most important part in the Maggie case was that it is consumed by a younger set of population. So I need to be a little more particular. And the company understood when their revenues went down. And you know, So we can join back. I'm sorry. There was some issue. And let me see how do I join, show my.
Now you are visible.
What, you can't see me again?
Yes, sir, you are visible, ma'am. You are visible.
Okay.
But share the screen.
Screen is not visible?
Yes, ma'am. It is not visible.
Visible, madam.
Yeah, I don't know what goes on and with the screen.
Screen is also moving, madam.
Yeah, I don't know. Let me see. Otherwise, I will. Let me see. I don't know what.
Bottom line, there is an icon share.
Just let me see what's. Did come after some time. I did do that sharing. Can you? Oh, meanwhile, till I see what is wrong, I think it should be here. Screen.
Ma'am, share option is visible to you or not?
Yeah, it is now. I don't know, something had happened. Can you see my screen now?
Yes, ma'am. Yes, ma'am. Ma'am, it's okay.
Now it's on. I'll put it on.
Presentation board, okay.
Yeah, I'll put it on slideshow. Okay. Can you see it now?
Yes, ma'am. Yes, ma'am.
Okay, sorry. I I don't know what happened. Okay, so now we have done the Maggie case. Now I want to do the, which was a lot more serious, the Maruti factory case. You know, this had a lot of learnings for each one of us. Each one of us. So I've given a very brief account, but I would want to listen from you based on your understanding about the case study. So take a minute. Yes. See, it's a decade after the case. It happened in July 2012. So what do you think was the issue in the Maruti factory violence? And it was a good trade union case. I don't know if some of you are teaching this. But let me just add one or two things. Even the media and the management before the violence had not given a good hearing to the labor unrest, and they had turned a little blind eye to the problem which the workers were facing. So can we hear from someone?
Good afternoon, ma'am.
Good afternoon.
This is Dr. Pratima from NRC Rajahmundry.
Okay.
Ma'am, I could see that from the case study that the industrial relations IR scenario in that time was not very good. I mean, the relationship between the HR and then the workers was not good, and there was hardly any trust in between both of them, or they were not able to understand each other probably. I mean, workers' point of view must not have been understood also. Otherwise,
absolutely
so much of that much of rage would not have been done. Maybe they must have communicated, and then in spite of communication, also their point of view must have not been heard. Also, that could also might have led to this problem. That's the way I see this entire scenario. When the human touch must have lost, I suppose, the way they were dealing with the workers, that was not to the mark. Otherwise, such a big event must not have happened at those times.
Absolutely.
That's the way I look at it, ma'am. Yeah.
Absolutely. Now, what you have said, one thing which may not be in any book is the human touch. We take that for granted so many times. The human touch was not there in this whole case. And you know, to add on to your view, the media was also very insensitive. So again, I'll tell you, other manufacturing units will take a cue from this. Let me give you another example which is happening all the time. Are you aware of the strikes which are happening in Germany? Have you heard of the labor unrest in Germany? The strikes which are being faced by Lufthansa Airlines every day for the last 1 year now. People who are traveling suddenly are caught unaware because the workers go on strike. I mean, very recently also, the entire, airports were shut. No flight from Frankfurt, Munich was taking off. And it has been continuous. And you know what are the factors? What are the people they're demanding? I'm sure we should turn this into a good learning for India also. They are demanding hike in pay. They are demanding 5-day working week, contrast to what was, the way it happens in India. And we keep saying there's more of a work-life balance there. And they are suddenly, going on a strike, demanding increase in salary, demanding increase in facilities, and so on and so forth. The German government has still not been able to come up with a solution. But one of the solutions they are proposing is working for 5 days with the same salary. Now, now if I come to the Maruti factory case, it's a very serious case. In fact, any idea what Maruti has done after this, because the facts of the case, I've also given it in brief, where a manager lost his life, which is very, very, very serious. But do you know what Maruti has done after this? Any idea? And I'm going to build on what you said, human touch. Yeah. And the strike and how did it bounce back? You know what Maruti has done now? Maruti has it is building on only the human touch. If you go to a factory, I'm just a face. The workers are just a face. But all of us have families back home. So the manager who comes there has a wife, has children. The workers who come has a wife, has a family. So now what Maruti has done to avoid these kinds of problems, they have a connection between the managers and the workers. So there is some days when the families are invited, and it is not just the managers or just the workers. It's a complete interaction between the two so that I interact. And a lot of times, I'm sure a lot of you who teach HR will know, a lot of problems don't get solved with a formal solution, but they get solved with a informal kind of understanding. Okay. Anybody wants to add a little more? Yes? No? See, let me also add one thing. This kind of violence is unprecedented in the history of India. Forget about Maruti also. Okay? Now, let me give you a few more cases. Now, these are great learnings. Companies that fail to innovate in time. and I'll give you another perspective from here. When you read this, does this sound a little familiar? Kodak, is it still there? It has failed. How complacency killed Kodak. And can I not add a few more names like a Nokia, like a BlackBerry? Now, I'm sure each one of us would know the reasons for these and the why these companies failed. One clear, which I have started off with, the companies that fail to innovate in time. That is definitely one. So one learning is innovation is vital for survival. And if you do not innovate, you will be replaced by other organizations. And, innovation is critical to the kind of environment in which we live in. Let me ask you a question now. Give me the importance of experiential learning in a digital age, because it is linked to what we are saying here. What is the importance of experiential learning in a digital age? Yes, let's hear from you. Anyone?
We can apply artificial intelligence and innovative technological instruments. We can use
Okay.
in a graphical manner and 3D vision.
Absolutely. Yeah.
Yes.
So that is definitely. What else do you think will be a role? So, now what we are trying to say, whatever are our traditional methods are there. But now you have to move forward by thinking in terms of, let me say, artificial intelligence. So let me ask, yeah.
Okay, all these things are okay, but they give really the 360 degree of understanding and outlook or point of view for the student.
Yes, true. If I've understood, is this a question?
Yes. A point. It's not a question.
I can't hear the question. Can you just write it and message me? I'll read it and answer it.
Am I audible?
Yeah, now it is better. Yes.
Now my point is, so all these experiential learning methods will give 360-degree point of view to the student. Do you believe in that?
I have just understood these experiential learning methods do what in the real life. I have not been able to catch on. Somebody who's sitting in front can repeat the question for me.
Wow. Is it audible for you?
Now it is. Yeah, your voice is on.
Okay, ma'am. His point of question is that experiential learning is in 360 degrees point is considered for students learning. Is it sufficient for that?
I don't know. Why can't you message the question? I don't know. After experiential learning, I'm not able to understand the word. But meanwhile, message it and I'll go ahead. Yeah, okay, please. No, please message it. I would like to answer the question. Please message it, okay? See, what I'm just trying to say here is, till I get the question on my mobile, I'm just trying to discuss with you the role of AI in experiential learning and what I believe, even though I've not heard the question so carefully, but let me do a little of the experiential learning here. The experiential learning format is or can be used for very intelligent tutoring. Let me say that. One, how can that be used? What we think in terms of products, the same can be done in terms of our students, which means AI has the ability to adapt and personalize the learning journey. That is whatever little I've heard of the question, I'm trying to answer that. AI has the ability to adapt and personalize the learning journey of every student. Remember, we talk of slow learners and advanced learners. What does big data do? Big data analyzes and breaks up this data to adapt it to the different scenarios we are talking about. So AI has the capacity to adapt it to different requirements. And there is one more point which I would like to say here. AI can adapt to the different requirements of the university also. I haven't got the question. Please send me the question. I'm just answering based on whatever I thought I understood. So those are 2 points which I would like to make in the context of AI and the learning of experiential learning part. Let me also so let me forget about this. So these are all the learnings which have happened. So let me shift. Okay. So what are the learnings? This is exactly what I was saying. Now, let me give you another part of the learnings, which is a reality, which is not got to do anything with the innovations which are happening, but yes, it has got a lot of do with the change. Do you know what are Fortune 500 companies? We all know them. Every decade, this Fortune 500 list keeps on changing. There will be at least 10 or 20% of the companies who change, which means they get dropped from this list to the other list. Why do you think this Fortune 500 companies change? Why do you think? Yes? Why do you think the list of Fortune 500 companies changes? And why do you think they go bankrupt, merge, or drop?
Good afternoon, ma'am.
Yeah.
Pratima from NRC
Yes.
Rajahmundry.
Yes.
They must have not adapted to the scenario.
Yeah.
That they must have lost the foothold.
Exactly.
They
Not-
couldn't innovate.
Yeah, they fail to innovate. In fact, I can really hear you clearly. Maybe it's the where you are sitting. But see, the point is the main reason is the capacity to change. And if I put it in a little different languages, the capacity to struggle. In the case of Kodak, long before the digital camera came, one of their employees had made a digital camera. Do we know that? But the company never realized that this would be the future of tomorrow. And that is how Kodak also went out of circulation. So this is one. So the technological change, the globalization, all these are important reasons for these companies to change. Okay. There is probably I mentioned it also. Yes. You read the last part. So the others is why why so many companies. So basically this is an answer to why Fortune 500 companies, a lot of them will go out of circulation. If you read the last 3 lines, what do you think could be the reason for this? Again, let me say, fortunately, we are in a sector which is recession proof. You know what it means? How do you say education is recession proof? Education is recession proof because irrespective of what the scenario is, children will need to study. But the same is not true across other sectors. And if you look at what McKinsey is predicting, and this is like based on for the next few years, Standard & Poor 500 companies will vanish. So, one learning which you need to really have for companies is the kind of innovation they do, the kind of adaptation they do, and how they move forward. Okay. Anybody would like to add anything here? Okay. Tell me, out of the various AI tools, what kind of application do you think AI will have in education? What application do you think AI will have in education? We understand the big data part of it, but AI in education. Yes. How are you all adopting AI in your universities? Yes.
Ma'am, this is again Pratima from Rajahmundry, ma'am.
Yeah.
AI could come up with some personalized version of teaching for each of the student, depending on their IQ, their reception power, and then depending on their needs. Maybe AI could come up with a customized version of teaching or learning strategy for each of the students. This is the way I can imagine the things might be.
Okay. No, you're right. That is probably what all of us can predict in a kind of scenario in which you are today. Okay. Now let me put a little different question to you as faculty. How do you think some of you have adopted experiential learning in your classes? Let's hear that. Maybe it will be a good addition for me also. And we can give some suggestions to each other. How all of you have adopted or you will plan to adopt maybe after the lecture?
Ma'am, I would like to add something to Pratima. Myself, Dr. Purna. AI could be used for the learning process as such, madam, for designing our teaching process as well as evaluation also, preparing the question papers, assessing students, and assessing their levels also, ma'am.
Okay.
Oh, thank you.
Yes.
I took my students to real court and justice court, to observe the real proceedings of the cases and all, to teach business law cases.
Okay. Yes. In fact, it is being said AI will help to customize even education to the strengths and weaknesses of each student. Apart from whatever the national education policy talks of, I'm not going into that. But, the whole way in which we adapt to each student is something which, is going to be a lot more unique. And when we talk about the future of digital platforms, what or in what way they will help our students, I think, the kind of students you will have tomorrow, the kind of learning which will be there will be more connected and access to knowledge for each student. And let me also say one thing here. The form of PPT teaching is fine, but it will not survive the long run now. So if I put up a PPT, nobody is probably going to listen to me. I need to innovate in terms of could be interactive or just PPT for the information part of it. That is one part of it. Okay. Now this is just like an example which I was giving for, a startup business model and otherwise, But if you look at this slide, which I would want, and that is the kind of question I was asking you, and that is what I wanted to learn from you. What could be the probable areas where you will apply experiential learning? That was a question I was asking. What do you think would be the areas where you will use experiential learning? Yes, so I've given these areas to you. Can you tell me a little more on any of this based on your experience? Yes. So let's say I talk of mergers and acquisition. How can you use experiential learning in mergers and acquisition? Let's learn. Yeah. Yes. How do you think you will learn mergers and acquisition? What can be done? Can you give me a few examples of mergers and acquisition which were successful and mergers and acquisition which were not so successful? Do you think we cannot learn from there? Or let's say if I talk about risk management. Yes, somebody wants to say something? No. Okay. See, basically, yeah, sure.
Yeah. In mergers and acquisition, like recently, Big Basket was taken over by Tata.
Okay.
Like, even Land Rover and Jaguar cars.
Exactly. Yeah.
And even Tata is planning to buy distillery. I
Mhm.
think it was again postponed, I think.
Yeah, true, true. Very good, good example. Good example. Any other example you think of mergers and acquisition?
Even in banking also. Like,
Yeah, true. A lot of mergers and acquisitions have taken place in the banking sector. Exactly. You know, let me put it as one other learning. Experiential learning, the way you are talking about here. Or, I mean, now I have included even digital learning, AI in my talk. The greatest application would be that it will help us solve complex problem in a very easy way. You know, for a lot of mergers and acquisition which we talk about, we talk a lot about culture. You know, in mergers and acquisition, I'm sure there are a lot of financials, but we talk a lot about culture. Now, how that culture will get ingrained is going to be a great learning in terms of the whole classroom experience which you could which you could share with your students. Okay, one more thing, let's talk about the risk management or IPOs, which I'm sure you as commerce teachers, before we close. Risk management, how do you think it would be risk management? And I mean, on this, remember I was asking about AI and its role. Ultimately, for you as teachers, it will help you understand, each student separately, specifically, and maybe handle the case better. But coming back to IPOs, let's talk of IPOs, okay? Yes? Do you remember any of the IPOs which have come up? No? So, in IPOs, what happens is it's the price at which we quote the IPOs. And a lot of times, SEBI gives instructions to the various IPOs in terms of what is the price. And the way AI can help here is in terms of the book building process also. Do you know what the book building process is? Wherein, for an IPO, I'm not giving one price. I am giving a range. 200 to 220. How do you arrive at that range? Is exactly what AI can help you do. Okay, so or the other processes which have been completely digitalized in IPO. So all that can be a great learning for the whole experience for the companies. So what else is a part of a case study? And these could also be a part of your learning also. And the last question is what I'm a lot more particular about. If you were to start something similar, how will you do it differently? Okay. So I'm just skipping these scan. Okay. So any questions? I wait for you. Otherwise we can. Okay.
Good afternoon, ma'am.
Good afternoon.
Good afternoon, all. I am Srimati KJ Vijay Lakshmi, lecturer in commerce, PSC KVSC Government College, Nandyala. On behalf of Kadapa, it is my great privilege to express vote of thanks of today's session, ma'am.
Thank you.
I
Thank you.
express my wholehearted thanks to you, ma'am, Professor Madhuvich, for her excellent session on experiential learning. Through this session, Madam covers the areas of process of Excel, learning through reflection and doing. What is the role of teacher in experiential learning? How the teacher thinks beyond the traditional classroom, and what are the ways of Excel, etc. In this session, Madam gives through examples of a Kodak company and Maggie noodles, Maruti factory case, etc. Very nice session, madam. I thank once again you are enlightening us through your experience in experiential learning. Thank you, ma'am.
Okay, okay. Thank you so much. Lovely being with you. I hope the online was good. Yeah. Thank you. Thank you.
Please don't mind, we have 3:45 sessions, that is the reason why, nothing else. Thank you so much, ma'am, for being with us.
Thank you. Thank you.
Ma'am, please could you wait a minute, ma'am? I'm Pratima from Rajahmundry, ma'am. Ma'am, it's really an honor to have listened to your class once again, ma'am. I've been your student there in JNU, and then I had an opportunity to listen to your class once again. Thank you so much, ma'am.
Thank you.
And then
Thank you.
you're not feeling well, but in spite of that, you are here for us. I could
No.
that you have been training yourself to so much,
Oh,
and
no.
then in spite of that, you.
No, it was just a bad throat slightly, but that's okay. That's okay. That's okay.
We're absolutely delighted to that you have shared your knowledge with us, ma'am. Thank you so much. Get well soon. Yeah.
Thank you. Lovely. Lovely meeting all of you. Thank you, and all of you take care. Thank you so much. Thank you. Bye-bye. Bye.
Okay, ma'am, thank you. Okay, Deepak.
It's going to be still around